Ladies and gentlemen, welcome to the Midday Market Monitor. Okay, today we are looking happy, at least happier than we were last week. Let's take a look at the markets and then we can get into some other things that are going on. First off, we got to take a look at the NASDAQ. This is just incredible. Boom, up 2.3% on the day. Looks like the AI trade is back, ladies and gentlemen. Nebius ended up showing off a pretty cool new data center build out that they're doing, quite large. AWS as well. Google ended up showing up in the news quite a lot from some pretty big names in the tech space saying how much Gemini is blowing away their competition, that people are starting to switch over. People are making the claim that it's going to be permanently switch over from ChatGPT to Gemini. So let's take a look at some of these individual names, and then we will get into some other news that's happening right now. Google up 4%. Nebius up 8.7% and back up above $90 per share. Stock market news. What's up, man? Evan in chat. James is in chat. Good to see you, James. Tom, George, Arm Day Finance. Arm Day Finance. I like that. Welcome. Even though you guys are calling me late. How's it going? Okay. Now, I actually did see a video. I wasn't able to watch it in time. There's going to be a bunch of videos that I need to get caught up on. Talk about additional rate cuts, talk about a choppier market ahead from Mark Newton. I have not seen this video yet, but if you guys don't know Mark Newton, he's one of the technical guys that work at Fundstrat, and Tom Lee often quotes him for where he believes that crypto is going to be, especially by end of year. A lot of those claims were actually originally made from Mark Newton, but Mark Newton has a lot to say about the market that we're currently in. So let's take a look at CNBC to see what he has to say.
That was Mark Newton, Fundstrat, global head of technical strategy. After last week, it's Mark, it's good to see you. After last week, are we below certain indicators that are indicators that are signaling more selling, or is there any type of stabilization or basing pattern that you saw?
Yeah, thank you, Joe, and good morning to everybody. Look, I think it's less about the day-to-day volatility and more about the fact that we've seen a meaningful divergence between technology and the rest of the market, and that started, right around July. So tech had gone straight higher, whereas the rest of the market had largely gone sideways and not participated. So, when you look at the S&P, it's a little bit of a mirage because you see the market going straight up, but obviously that's changed in the last few weeks. We've had one of the worst Novembers now since 2008. We're down about 2%, but obviously that followed a much more resilient August, September, and October this year until the end of October. As to what's to come, my thinking is it's going to be a little choppier. It's certainly an unorthodox time for markets to be going down or sideways, but a lot of it is about lining up, the expectations of when the next Fed cut is. I say the market hates uncertainty. That's true with regards to whether or not we're going to cut or not. And I think Williams helped things out last Friday. The percentage chance of the market, cutting now was double than what it was earlier last week. So markets are, they're certainly helpful, when that kind of thing happens and start to stabilize and move higher. It's tough for me to say the lows are in per se. I think we probably could hit 6,400. But I think the maximum is probably about 7,000 now between now and the end of the year. So I'm not expecting, although I do see a bounce happening and likely starting this week, it's tough for me to say it's going to be off to the races until we start to see more evidence of more and more sectors starting to participate in this rally and not just technology.
You could have completely divergent opinions from Tom Lee, could you not?
Yeah, look, we have our own methodology, our own time frame for looking at markets.
But he expected choppiness early and then some good performance into the end of the year.
Yeah, both of us were positive this year. I rate technical analysis. Obviously, my target was 66.50. We're largely in line. We're talking with one another as we head towards the end of the year as to what next year has in store. Obviously, it's a midterm election year. Things tend to get a little choppier. Specifically, we've had 2 back-to-back years of over 20%. Now this year is probably also going to be 15 to 20% gains. So, it's right to have consolidation. That doesn't mean, the longer-term bull market's over. It doesn't mean we're going into a bear market or, the AI trend.
So you're at
has worn out.
66.50 still for the end of the year.
Yeah, I try not to change that on a week-to-week basis. But I
Tom's at
think
7,000, I think, isn't he? Or where is he?
Yeah, he was right around my level. I think he raised it a few months ago to right around 7. We got to 7. It's difficult to nitpick on levels. It's more just looking at the market as a whole, what's happening with interest rates and the dollar and equity. There's only about half of all stocks that are above their 50-day moving average with regard, and that's troublesome. That happened also this time last year, and it also happened back in 2021. And so we need to see evidence of financials starting to participate, industrials, discretionary. Obviously tech is the elephant in the room. It's important to see tech work being 30% of the market, but tech's gotten very overdone and still delivering a lot of the earnings. Earnings have been great. The economy largely has been in good shape.
So the advance has been overdone, not the sell-off. You expect more problems in tech, or does tech lead us back to?
I think tech is going to bounce after what we've seen in the last few weeks.
Okay.
The question is, whether some of these stocks can continue to deliver, or at least the stocks can deliver the way that we've seen in recent months. I think it's been a big run. You've seen noticeable evidence of stocks like NVIDIA slowing since July that have largely been sideways. Meanwhile, others like Apple, which are extraordinarily important for the market, 6-7% of the S&P are still doing just fine. So there's been a little bifurcation. Parts of software gave that sign earlier this summer and started to do a lot worse.
Yeah.
We need the market to be moving, many sectors moving in unison all together. We also want to have a little bit more confidence in the economy. With the shutdown, there's just a lot of, unknowns, I think, and those will, I think things will be fine heading into next year, but my thinking is, it could be a choppier time until we resolve some of these issues.
I think that's pretty good. I just wanted to quickly take a look at the market. Sorry, I was watching some of the movements that we're having today. SoFi continuing to climb on the day, now up 6.67%. Tesla up 7%. AMD up 4.8%. Hood up 5.2%. It is looking like a very good day for those high beta names, right? And these are the same names that will fall a ton. IREN back at 47. I mean, this is, we were taking a look at this company nearing like freaking in the 70s here, now getting chopped by quite a lot. But as you can see, once risk on money comes back onto the markets, they flood into these new names, and there's not necessarily that much new news that's pumping these names back up. Dan Ives, the AI ETF that they're trying to start here, Wedbush's AI name, up 3.5% on the day. Okay, Zeta up 2.9%. Google, this is Google at 313 right now. 318.56 was hit earlier today, a historical high. Okay, a lot of that was actually from some of the commentary that was made over the weekend. Some of that even from Mark Benioff, which I won't use the same language that he used. But, and by the way, he doesn't swear. This man does not swear often, but he could not help himself whenever he said, I've used ChatGPT every day for 3 years. I just spent 2 hours on Gemini 3 and I'm not going back. The leap is insane. The reasoning, speed, images, video, everything is sharper and faster. It feels like the world just changed again. Wow. That's extremely, extremely strong language for LLMs, which people have, stated are a commodity, and that there is, everyone's trying to point to a winner, but essentially all of them are leapfrogging each other, and that they're going to have these massive advancements in technology, and that, all of them can take first place at some form of another. It's just how long do you stay there? And then while you're first place, are you actually going to the market and having people switch over to your LLM? if people are actually leaving ChatGPT to go to Gemini, then you're going to see real fundamental change. If people are just pointing to just the evaluations of these models and saying, hey, look, like Gemini is better, but yet the whole world continues to run on ChatGPT, then that's nothing. There's no difference there. Might as well be a research project. This is seeing real people make changes over to Gemini. And especially with big names like Mark Benioff from Salesforce, that is a huge claim, right? You have massive companies that are following every word that you say, and they're going, okay, well, maybe we should look at, going to Gemini 3. It's not a claim saying, hey, this is a pretty good model and a good competition. He said, it feels like the world has changed again based on this big leap. I mean, honestly, can I ask the chat, who saw that tweet yesterday and said, wow, I haven't checked out Gemini in a while. Maybe it's time that, I pay the $20 a month and see what's actually going on over there. Especially with Gemini, if they can not only be, one of the largest names in this space, one of the best, they also are doing that similar effect that Microsoft did with Teams, bundling. So a lot of the ways that they actually sell into Gemini is through, Google One AI package, which is essentially, hey, we're going to give you 2 terabytes of storage. We're going to give you YouTube Premium. We're going to give you Google Home Premium. We're going to give you Gemini. We're going to give you all of these extra tools that go along with it. It's going to work within your existing workplaces, the Google suite of products, the documents, the sheets, the emails. That is such, on a dollar-to-dollar basis, even if the models are worse, such a compelling offer versus ChatGPT. Now, if the models aren't worse, what really is the competition, right? And I think that's what the market is trying to realize is like, okay, if Google actually does figure this out, how seamless is this cross-sell going to be to their already existing billions of users? And if we take a look here from Wall Street on how they've been sort of taking a look at this, and honestly, I think a big spotlight of this has been given because of Warren Buffett's Berkshire Hathaway, right? You've seen a lot of disrespect on Google's stock through the last little year and a half or whatever that we've covered it here, but since then, and especially since Warren Buffett has been covering it, look at all the new analysts that have come out and said, oh, you know what, this is a $320 stock, $330, $325, $335. These are much larger price targets than where we were a year ago whenever analysts were telling us that this stock was going to be $130 by the end of 2025. Like, it's a long change from where we are. Not a single sell rating on this company that a long time ago, well, sorry, not even that long ago, was dead, losing market share, and search was going to die, all of these things. They weren't going to be able to monetize artificial intelligence. There were too many of these types of quotes. Now, Evan was in chat. I don't know if he's still here, but shout out to Evan really quick. Google has started rolling out ads in AI mode for the first time ever. Now, this is a search product. If you go to google.com, right, just the basic search product, which is the number one website that people go to, and then the next biggest websites are YouTube and other IPs of Google in general or Alphabet in general. That you are now going to feel what Gemini feels like directly in those services. It's actually super anecdotal, but my girlfriend has been a lifelong Apple user, and then started using ChatGPT as her LLM because that's the one that was popularized. Then I asked her the other day, I said, what do you use? She goes, honestly, Google search has just gotten really good. And she didn't really think it was Gemini. She just sees the AI overviews and it answers exactly how she wants it to answer, right? That is another way to just make AI and a lot of the products of where we're going, it should just work, right? Just work. You ask a question, you ask it to do an assignment, and it should just be able to do it. You don't have to go out to a certain, part of the internet or sign up to this certain thing or go to this certain chatbot, you should just go to the internet, which is Google, essentially. If you're on Apple, it's Google. If you're on an Android, it's Google. If you know, all of you guys here right now are using a Google product. And so you're going to see a lot more Gemini products integrated into this service where, you know, better video summarizations for live streams, let's say. A common question is, what has already happened? Like, I just joined. What did I miss? AI should be able to fill you in on that. Highlight certain parts of the video that were, you know, really engaging or something like this. I shouldn't be the one to tell you guys where the chapters are in this live stream. That's all going to be done by artificial intelligence, right? So, yeah. Google is a monopoly. They are so fortunate. This is so recently litigated and unlikely to be revisited. I mean, the reason why they didn't end up losing Google Chrome is because, in large part, ChatGPT ended up showing that they could take market share. So maybe Gemini was just waiting to come out, eh? Google's really going to go crazy with ads nowadays. Gemini is like a genius you know who you do not want to hang out with, and it just does not get it. I don't have that same experience on Gemini. I actually found like it in terms of my favorite LLMs, and I have not been playing around with Gemini as much as I have with the Grok or ChatGPT, but ChatGPT is my favorite by far. I mean, it just understands me. It like the biggest complaint that I have whenever I go online and I talk about how crappy Grok is, because honestly, it's the worst piece of garbage and they should honestly restart. It sucks so bad. And anyone who says differently is like, I don't even know how you guys are thinking about your lives. Like, I asked it to go and I said, make me a photo of Anthony Noto. And then it throws up some random person. I even said the CEO of SoFi. So you know exactly who I'm talking about. It throws up some random man. It's not Anthony Noto at all. No one could say it's Anthony Noto. It doesn't look anything like him. And then someone said, you're doing it wrong. It doesn't source the internet, so you have to give it an image. Huh? No, bro. You're saying that an LLM, which is supposed to be magic, it's supposed to be that it's user error. The whole idea of natural language processing is that there shouldn't be no user error. I should be able to spell incorrectly. I should be able to, I should be able to make many mistakes and you figure it out. ChatGPT can figure it out. Gemini can figure it out. Grok is sitting with its hands in its pants like a freaking idiot. So I don't agree with those types of comments. It's great for research, but the whole part is that it should know what I want to do. That's what makes it smart, not me. Like, obviously, I'm aware of prompt engineering and getting good at talking to artificial intelligence, but that shouldn't be what actually makes it stand out. It should be ease of use. And honestly, that's why I think ChatGPT has done so well. It's not that, on the evaluations and the benchmarks that they've done, the highest forever. It's that it just feels like it just does what you want. And I think long context is going to be one of those things. And, Jensen Huang has said that that's going to be the next big push. And really what Vera Rubin, the next sort of architecture for NVIDIA is going to focus on is a long context. This is really important. I should not have to build out who I am and the projects that I'm working on in every single prompt. I should be able to say, hey, you already know me. You already know, like, help me continue on with what we were talking about 3 weeks ago and help me build out this project. It should already know how to do that. Google or Gemini, or sorry, no, I just said the same thing. ChatGPT is really good at that. That's all I was trying to say. However, Grok doesn't even know who I am and it's connected to my X account. It's unbelievable. If I could short Grok, I would. Okay. Let's get back. I'm done with my tirade. I just, very happy with Google, and I love that it's investable, and I continue to hold very strongly in my Google thesis, and I think they're going to do very well. Also, Nebius above 90. Happy I continued to buy in under 90. I probably could buy more today. However, I'm not a big fan of buying on 9% days without news breaks. It's more of a shift in sentiment, and that shift in sentiment could be erased tomorrow if Trump makes a tweet or if Jay Powell makes a tweet. Well, he's not tweeting often, but if there's any commentary by any other Fed governors that maybe suggests that we're not seeing a rate cut, then this could go down another 9% because it's not all based on concrete news. We ended up seeing something from Nebius come out today, but to me, it didn't seem like anything that wasn't already planned. This is what's so funny is everyone Nebius decides to seek approval for a new data center, a very, very large one. The initial plans were 130 acres, and now it's going to be as much as potentially 1,200 acres. Okay, so that's absolutely massive. There's internal projections calling for roughly 700% revenue growth in full year 2026. So they need to continuously build out these extremely large data centers. Now, what's so funny is that something like this can happen, and then people go, oh, yeah, Nebius is growing. And it's like, come on, guys. This has not changed. The projections haven't changed. There's been no bad news. It's just been sentiment change. And yet they just have to remind us from time to time that they're still working. And then everyone goes, oh, yeah, Nebius exists. Let's run it up. They haven't stopped. I don't know. I find it kind of interesting. That brings me to another video about some of this build out where I wanted to talk about the freight business. Let's take a look at this video here.
All right, you know where there's not a lot of fear and anxiety? At the CNBC CEO Council event on the mean streets of Palm Beach Gardens, Florida, where Morgan Brennan is. Morgan.
Yeah, I have the best live shot of the day, Brian. Thank you. Joining me now here from the CNBC CEO Council for an exclusive interview, Jim Crane. He is chairman of Crane Worldwide Logistics, which is involved in a whole host of industries: autos, energy, hospitality, life sciences, more. He is also the owner of the Houston Astros and a serial entrepreneur. It's great to have you here on set. Welcome.
Thank you for having us.
You're in the freight business. How's the freight business right now?
Freight business has been pretty good this year. It's driven a lot by high tech. A lot of the high tech folks building data centers, servers, racks, all the equipment associated with that's flying around all over the world. The rest of the industry is, a little down, not much, a point or two, but everybody's adapted to the tariffs and all the things they needed to do to adjust to that. And I think things are smoothing out.
Yeah, and I was just going to ask about the impact of all the volatility we have seen this year with trade and tariffs and what that's meant.
Well, it was just the unknown. And a lot of times we weren't sure. We talked about things the government was going to do, and then some of it changed. And once they locked in, you got to get all those adjustments made for people that are buying the goods and how that affect their costs. And quite frankly, it will go down to the consumer at some point. There's some things they can do. They can put it, in a bonded warehouse and not pay the tariff until they take it out. They can send stuff over and bring it back and get some recovery that way. But for the most part, if it goes up, it's going to hit the bottom line somewhere.
I mean, you're on the front lines of trade flows. Have you seen a shift in terms of where things are going and coming?
Asia's still heavy on the tech side, but the general industries are good. The oil and gas is kind of steady. Pharmaceuticals is still good. Retail's held its own, but nobody's blowing the doors off right now.
On the consumer side, we're heading into holiday season. There's been a lot of talk about a pull forward and a buildup in inventories and maybe a replenishment after the new year. What are your thoughts?
Well, it always gets pulled forward. This year was a little difficult. You may see some more late stuff coming in now. If it's not here by now, you're probably not going to see it on the shelves. So most of it's been done, and we did see a lot of activity, a huge September across the board for most people in our business.
How do you think this sets us up for 2026?
26, it's a question mark. The market's a little rocky. I think if things settle down a little bit, I'm always positive. I think there's still a lot of big plans. The tech thing's just getting started, the data centers and all of the money that's being raised to go in there. So I think we've got a few bright years with that big push behind us, but after that, you don't know. And you don't know when that's going to settle down either.
I want to shift gears here because you are the owner of the Houston Astros, obviously a hugely successful baseball team and a franchise that you've rebuilt. Economics around baseball can be challenging, or so I've heard. Just want to get a little bit of the insights from you in terms of lessons learned and how you've been able to rebuild this franchise.
Well, you really got to try to keep your revenue, keep your fans happy. That's winning. This year we got didn't make the playoffs for the first time in 8 years, but we had a good team, had some injuries, so it doesn't always go your way. I think baseball's in good shape. You saw great.
I don't care about baseball. If you guys care about baseball, check out the Jim Crane video on the freight business on CNBC. Okay. That being said, I do like that the freight business, especially for AI data center buildouts, is doing very well. It's so funny, the comments that people make on the market versus what we are actually seeing. Like, oh, this is only going to go on for so long. This is a big bubble. And then you see all the commentary around the actual companies that are in it saying, hey, like, not only are we not just focused on building out for the future, listen to the actual hyperscalers, which unfortunately have earnings a little bit earlier on in this season. So then people forget what they said. They just said, hey, we build out whenever we have those orders ready. Okay. Like we're not going in advance. We're not trying to anticipate the future here. We're just buying chips and plotting out data centers as we get that capacity. We are fully booked. Okay. We cannot get enough. We have to go to these neo clouds to ask for additional capacity, and we're paying extra for that because we have customers that have that type of demand. Okay. This is not one company's build out. This is not one sector's build out. This is not one country's build out. This is the world building out across all sectors, and that the cloud business that was existing previously was not big enough to sustain how much demand that we would actually see in artificial intelligence. So we're seeing AMD do very well. We're seeing Broadcom do very well. We're seeing Marvell do very well. We're seeing NVIDIA do very well. It's across the board. Okay. All the cloud providers, the hyperscalers across the board are doing well. The neo clouds are doing well. Whenever you look to semi-analysis and you see the difference in the quality of the way that these data centers are being set up, and realize that even the ones that are doing quite poorly or have some bad practices, like charging people an hourly rate while the actual data centers are being set up rather than for actual utilization of the GPUs, that they are still over capacity. And I'm sorry to say this, but IREN is not ranked very highly from the semi-analysis team. I think they're below bronze. They're in the underperformance side. They're seeing more demand than they know what to do with. Nebius, that is an A-list gold-rated NeoCloud, doing extremely well. CoreWeave doing extremely well. Now, there's some additional concerns that people have with raising debt in order to continue to grow. But even if they are to pay off all of that debt, not continue to build, okay, do not continue to play into capital expenditures. The existing clouds are building a business that is running on recurring or annual recurring revenue. So if they were to stop building and say, okay, you know what, we're not going to worry about the next 4 years. We're just going to worry about our customers today because everyone's panicking about this AI bubble. They would still get, money over and over and over. It just wouldn't be at the growth rate that people would expect. And they might lose market share over time if the market it continues to grow around them. But I have no concerns right now about this build out until we start seeing customers or some sort of breakthrough that says, hey, you know what? The token generation that's required in order for us to run these extremely large LLMs has actually just got cut by 1/200th, or it's now down to 1/200th. Some sort of major breakthrough that just completely changes. Another DeepSeek moment. We need, like I said, whenever the DeepSeek moment originally happened, I think it was, I forget who the commentator was that said this, might have been Jensen, but like we needed 2, 3, or 5 more of those DeepSeek like moments to really bring down the costs in order to scare away this demand. There's that much demand right now. So, yeah, I'm not worried about Burry's newsletter, and I actually don't fault him for creating the newsletter. I mean, I never understood why it's so like negative for a business, which he is. He runs a business to have a for-profit model. Never understood that. Everyone's bashing him. He could be wrong, but then the market should decide that based on like, if you don't think that it's worth it, don't buy it, and it should be as seamless as that. So, he can do what he wants. That's perfectly fine, but I'm not going to be buying into the Burry newsletter because I don't think that what he has to say is anything but fear-mongering at this point. You made a really good call, okay? But aside from that, where would you be without that one decision? If you look to Warren Buffett and you pull out Apple, or you pull out Coca-Cola, or you pull out Geico, or you pull out any of these names, there's still 100 other great decisions. Burry's made a great trade, and then people are going to back up his every decision as if he hasn't called the last 20 bubbles. For some reason, people just seem to believe him. Honestly, because I think that the market really does not want this AI thing to be true. I think it breaks the way that people think. I think that people are fearing for their jobs. So like, people are honestly trying to call BS on this AI revolution as hard as they can. And it's just not coming to fruition. It's just not true. I'm spending more on AI today than I ever have. I'm getting more out of it, is what it is. Bears need bears. Hey, that's a good saying. I've never heard that, but that's very funny. The Bears need bears. It gets them hyped. I've had to reassure people in my life that the world is not going to end. Yeah. It's true. It's true. And the sort of thing with AI, it's like I would never bet against it because there's no putting the genie back in the bottle. There's no protesting. There's no picket line, because if the United States doesn't do it, then China will. And I would much rather artificial intelligence be built on United States or allied technology than Chinese technology. I'm not from America, but I live in Canada, but all the technology that I currently have was built mostly from Western society. Like, that's kind of what the United States was really good at. They build good tech. And so AI is not going to slow down if people decide that, oh, you know what, AI is not going to enter our workspace. I think any company that comes out and says anything along those lines, I think those should be immediately ones that you end up shorting or not. Well, I'm not going to short any businesses, but I'm definitely not going to bet with any company that sort of turns a blind eye to artificial intelligence. You even see it with like Steam and stuff. We were talking about that. Steam said, we're not going to put up games on the platform if they have artificial intelligence or LLMs in their games. Like, okay, well, good luck competing with the companies that do want to put those in, because they'll be smart and they'll be fun and people will prefer to play them. Who wants to play in a game that has 5 character voice lines or 100 character voice lines versus one that is artificially generating a real conversation in game? The 3 AI godfathers are kind of from Canada. No, the 3 AI godfathers are immigrants, and then they moved to Canada so then they could go to the United States. Canada really allowed people to come into the country. So then these quote unquote AI godfathers wanted them in, wanted to go. Okay. What's a good entry price for Google? That's a hard thing to say. I mean, one, I don't really, I'm not adding to Google right now. I've built out a position, but if I didn't think that, if I thought that it was going to be a $5 trillion business in the future, would I feel bad purchasing above 300 today? Above, what's the, what is the 3.8 trillion? Would I want to bet on this name today in order to squeeze out an additional $1.2 trillion? I don't know. I think a nice buy. I mean, over a long period of time, you're probably safe, but I think a nice buy would be somewhere around 250, something like that. That would feel really comfortable to me, but maybe that's because I've built a position, and it's accelerating. The prices change very, very quickly. So it's kind of hard, right? Like, I don't know. I honestly don't think I have a good answer for you just yet. Market's going to pull back again. Just be patient. I'm not saying you're wrong. We could definitely see a lot more volatility. We have midterms next year, but I've never waited for a market dip. I don't think that's a thing that I think is prudent to do. The problem is that, let's imagine that in either the rest of the year we end up seeing choppiness, and that brings us down an additional, like on the grander market scheme, S&P 500, NASDAQ, how much are we calling for? An additional 5% sell-off? An additional 3% sell-off? Is that worth it to wait for more choppiness? What are you risking on the other end? You're risking we do get a rate cut in December, and then the companies that have continued to grow revenue and EPS, all these AI names that honestly fundamentally have done very well, you miss out on that trade completely. And then people, like Peter Lynch has said so many times, people lose more money waiting for a downturn than just buying into markets in general. I do have, someone said anchoring bias. I do have anchoring bias probably in Google just because the speed at which it's accumulated so fast. Okay. Google runs away and you never feel the price is right to get back in. Well, I've never sold. I'm just holding. This is why I don't trade. I don't feel any risk being I've not sold a single share of Google. It's not running away from me. But yeah, it has run up very quickly. Excuse me, in a short period of time. I also just think like there's just so many names that are not running up right now. Meta, that I also think will be a very good bet, and you are able to see quite the discount on that. Amazon is another one. This one has pulled back a lot since that last quarter, 225 now. I think that's another great deal. You're talking about a $2.4 trillion business that is positioned perfectly for artificial intelligence, robotics, full self-driving, agentic AI. Like just perfectly placed. Let me keep the stock price up. It's easier on the eyes than my boring face. What's your average price for Google? I can check right now. I've I've got an idea, but I don't know 100% because I averaged up a lot since buying. Let's see here. My average price is 182 now. 182. Okay. Trump posted on China. Where's the Don? Okay. I'm not seeing. I'm only seeing posts from 4 hours ago. Mine's 127. I don't even think I have any purchases under 127. I think the lowest I was buying in at was like, or maybe I did, but I remember buying at like 140, 150, 160, all the way up to like 210. Trump had a very good telephone call with President Xi. Thank you. Thank you. That's awesome. Hopefully, NVIDIA can get into China. That would be freaking amazing. It's so funny that you can get this stock under 4.5 trillion, 183. That's lower than where we were before earnings. Before earnings. Like, I would be very confident in buying NVIDIA, not over Google. Like, I'm not trying to say that Google's not a great buy, but like, I think there's just so much skepticism on if NVIDIA can keep their lead. And I don't have as many questions about that, to be honest. Revolut just secured a $75 billion company valuation. $75 billion. That's up there on one of the most aggressive valuations in fintech. Oh, I have the tweet from Trump now. I just had a very good telephone call with President Xi of China. We discussed many topics, including Ukraine, Russia, fentanyl, soybeans, and other farm products, etc. We have done a good and very important deal with our great farmers, and it will only get better. Our relationship with China is extremely strong. This call was a follow-up to our highly successful meeting in South Korea 3 weeks ago. Since then, there has been more significant progress on both sides in keeping our agreement current and accurate. Now we can set our sights on the big picture. To that end, President Xi invited me to visit Beijing in April, which I accepted, and I will reciprocate where he will be a guest for the state visiting the United States later in the year. We agreed that this is important as we communicate often, which I look forward to doing. Thank you for your attention to this matter, Donald J. Trump. Yeah, what about the chips, man? I want the chips. But who knows? Josh Brown on CNBC. Let's take a look. I'm happy to listen. Bear with me. Yeah, he is.
Wants, and they're benefiting from in the
X98.
Yeah.
100% back to the inception of it since 98.
You ever hear that term? Probably from me, bread thrust. Like, that's what that is, basically, but on a sector basis. It just tells you the level of institutional accumulation coming in. 21% of all the components in the XLV made a 52-week high on Friday. They are buying these names, and there's a reason. You get this really interesting grouping of sub-industries, and I'm going to talk about one of them right now. The life sciences, tools, and services names are set up beautifully both this year and next year from an earnings growth perspective. Most of these are recurring revenue businesses, which is Wall Street wants, and they're benefiting from an AI tailwind, but they're not wholly reliant on things like, I don't know, data centers, for example. So for growth investors that rode these traditional AI names up this year, now they want to switch. They want to buy cheaper stocks that also have that kind of recurring revenue profile. These are the names: Mettler Toledo, MTD. Stock broke to a fresh 52-week high. We're showing you 50 and 200-day here to make the point that these are uptrends that have been going on for most of the year. And when you saw that golden cross happen earlier in the summer, that told you something interesting was brewing. And then you got that follow through here. So we like that name. Citigroup's target is 1,700. That would be 20% higher. Thermo Fisher is the biggest name in the group, $220 billion market cap. This one is not quite there yet, as you can see, not quite over the February high from earlier this year. But you have a golden cross and you have all the ingredients for a potential breakout. I feel pretty confident it'll happen. Everybody's watching those March, April highs. When it gets through, there's no sellers. It's an entirely different story. The last one is Agilent. Agilent spun out of Hewlett-Packard 26 years ago. Ticker symbol A. Looks exactly like Mettler Toledo. It's a $42 billion market cap, right in the sweet spot of that next tier of large cap stock, riding the 50-day beautifully. Look at it. Every challenge on the 50-day, the buyers came in exactly where they were supposed to, almost like it was a script. Meanwhile, you've got a vacuum. If it breaks this level, 140, you have to go back to 2021. It was at 180. You really have 40 points with no natural resistance. So I'm watching this one for a breakout as well. Mettler Toledo's all the way through. I think Agilent is next, followed by Thermo Fisher. They're buying these names because they like the business, they like the outlook, they're not terribly expensive, and it's time for some new blood in people's portfolios. What do you think?
Well, that's Weiss.
You know,
He just gave you a couple of great trades.
He did, and I've been on the sidelines. Look, I think it still go. I mean, in an accommodative interest rate environment, healthcare is going to work, particularly biotech. And as I mentioned last week, until you see supply in IPOs or secondaries, there's nothing really to eat into that.
Look at that
manage.
move from end of like beginning of fall to
Crazy.
now. Unbelievable, Joe. We've
Yeah.
got a lot of exposure here.
Strongest momentum, 5, 30, 40-day time frame. I absolutely have a lot of exposure here today. 52-week highs, Eli, Lilly, Biogen, Medtronic, McKesson. So money's coming in. IDEX Labs, which we own in
IDEX
Jersey.
is a great story.
Why don't you own Lilly? Why doesn't anybody own Lilly here?
We did
So,
own Lilly.
I know.
We
Well,
were,
you
we were
did
shaken
isn't,
out of Lilly.
does.
Just too expensive. I mean, you just don't pay that for a drug company. Even if you double the historical valuation, you're still way, way above where it should be. So I just can't do that. And there's more competition coming onto the market for their primary drug. I just can't see.
I think Lilly is more important symbolically. This is the first healthcare company to reach $1 trillion market cap.
Mm-hmm.
The fact that that's possible, I think, is leading to the momentum in the rest of the sector. People are waking up and saying, wait a minute, there are growth companies in this group that are not priced like microchip companies. They're not priced like semis, and they have that potential to do what Lilly just did. You look at the names on my list that we've done segments on all year, Judge. Alnilam, Gilead, Amgen, AbbVie. They all look great.
I've got some breaking news. I want to get to Eamon Javers. It's regarding the White House, and I've seen these headlines move. Tell our viewers what they are, Eamon.
Yeah, Scott, President Trump says he's going to Beijing in April. This coming in a social media post just a couple of moments ago. The president giving a readout of his call with Xi Jinping of China earlier today. We saw both sides confirm the call this morning, but now President Trump is saying some of the details of what they discussed. He says they discussed soybeans and American farmers, and he also says President Xi invited me to visit Beijing in April, which I accepted, and I reciprocated, where he will be my guest for a state visit in the U.S. later in the year. So Xi Jinping coming to the United States in 2026, says the president. He says, we agreed that it is important that we communicate often, which I look forward to doing. He says the relationship between the United States and China is a solid one. No mention in this readout, Scott, of the issues in Ukraine or Taiwan, which the Chinese readout earlier today did refer to, said both areas had been discussed by the two leaders. So we'll see if the White House gives us any further indication this afternoon of what it was that they talked about in Ukraine, particularly in light of the weekend of diplomacy in Geneva, as the United States tries to hammer out an agreement that could be acceptable to both Ukraine and Russia to end that war there, guys.
Market's going to like any bit of positive news regarding the relationship between these two countries. I see a little bit of a move. Eamon, thank you. It's Eamon Javers down in D.C. about these headlines. You
Market's on the high, of course. The market likes it.
Yeah.
Capital's flowing in.
2 2/3% for the NAS. A real point of contention, obviously, between these two countries. Export controls regarding chips, which were already one of the brightest spots in the market today. If you looked at Broadcom and Micron, for example, those stocks are ripping again. NASDAQ's good for 585 points, 2 2/3%. S&P's good for 1.5%. Dow's up quite nicely. So you have a nice move here to start the week. We're back after this with Santoli and his midday word.
I literally, I'm not the greatest all-around investor. I'll be honest with you guys. I've focused on technology. I've focused on finance. They're easy to understand industries, extremely high profit. But then I go and take a look at some of these biotech names, and I'm not suggesting that they don't have moats or anything along these lines. It's just like these companies are growing at 5-6% with similar gross margins, if not slightly lower to the Mag 7. Flowing down to operating margins is net income margin even lower than the Mag 7. Growing much slower, and they have the same margins, or they have the same multiples. Like, I'm looking at Allergent here, and like we're looking at a P ratio of 27 times, 30 times price to free cash flow on a EV to free cash flow, 31.65 times, if not 32 times. Oh, sorry. No. That's at their quarter end. Now they're at 41.57 times, and a PE ratio sitting at 35.81 times. I just, honestly, I know that Josh said that there's room for other names in your portfolio, or people want that. I don't want that. It's so much easier to understand a handful of names and get every piece of news from those names and really break down the importance of those names than trying to understand 200 different companies, sort of. You know? I think that the Mag 7 names are still extremely cheap. You just have to keep putting it into perspective of like, okay, let's look at the multiples versus the broader market. You're handpicking names. Okay, well, what's their moat? What's their advantage? What's their growth rates? What's their margins? What's their multiple? I don't know. Yeah, no, it's true. NVIDIA. It doesn't matter what industry you are. Like that's the amazing thing about big tech. It's not like Meta. You might say, okay, well, they're serving, consumer niches for something that's a little bit of a, discretionary, not discretionary spend, but like no one needs social media. I get it. Okay. But cloud computing, Microsoft Office, the Google suite, like these are not even, they work in every single market in every country. It's just incredible. So I've got no business trying to touch healthcare, trying to pick up on those dips. Yeah, no, thank you. Let's move on. It's like saying no one needs YouTube. Oh, I don't think people need YouTube. If everything goes bad and the world turns to crap, I'm not saying that I'm buying, let's not overblow my words here. I'm actively buying Meta. Okay. You do not need Instagram. You need the tools that Microsoft is selling you, that Google is selling you. You need the tools that AWS is selling you, or commerce in general through Amazon. So don't blow open. Like I love Meta. I'm just saying it's a nice to have, not a need to have. And we do need healthcare. That's for sure. But I don't know if that requires a multiple for companies. And by the way, I looked at like Agilent and like there were many quarters in the last little bit where they were actually at negative revenues. Like I don't understand the business at all, but if the Mag 7 names did something like this where they were making a ton, and I'm not talking about Tesla or something like this, where they were growing a lot and then shrinking a lot and then growing a lot, and their business was very cyclical or went through these types of massive changes, just like the multiples would be so much different. I have 13 stocks now. That's enough. I think that's a good selection. YouTube is my favorite too. I watch a lot of YouTube. Okay. I have 4 stocks and 2 ETFs. I don't know if I could ever go back to that life. That, my friend, is fun. Big bets, little bit of safety in the ETFs. To me, honestly, my Mag 7s are ETFs. They're so diversified now, and they're only going to get bigger. Tanner, thoughts on Uber? I'm definitely more positive on it than most people would probably assume. Great fundamental business, great margins. Obviously know what their existential threat is, and working on many partnerships and many companies, and they have the tools to offer them utilization. So then, startup AV companies can end up going to Uber and saying, hey, like we have the product, but no one's going to download our random app that's running in this one city. So if we go to Uber, then, they can guarantee us a level of utilization, and then, maybe it'll be slightly lower margin because Uber needs to take their cut, but we'll always have customers. That's pretty exciting. Let's not forget Waymo is partnering with Uber in many cities as well. And the truth is, my real take on autonomous driving is that there's not going to be really any winner. Maybe Tesla can win because they have such a differentiated advantage, which is that many of the self-driving cars are already on the road, and that there might come a day where there is a switch that turns on and allows anyone to enter their car into this ecosystem and take a nice split. That's pretty cool. That's hard to compete with. I think in the long term, though, whenever people go to get on a bus or get in a taxi, they're not like, oh, that's not my favorite model of vehicle. It never, ever happens. You get the one that's closest to you. And so with self-driving cars, I think they are complete commodities. No one's going to care about the... I think over time they'll start shifting, and there'll be more luxuries in it. Seats that face each other, very similar to the what's Amazon's the Zooks. These sort of things. Maybe tables in the middle, Wi-Fi, place to put a laptop, actually get some work done. There'll be some focused ones for more business owners, stuff like this, or productive individuals. I think that will happen, but I don't see why anyone's going to be like, no, I need to get in a Waymo, and I'm not going to get in a Tesla, aside from political views, or I'm going to get in a Waymo, but I'm not going to get into a Zoox or different company that's also working in the industry. Heck no, dude. And that's why I also think that Uber is going to win, because you're not going to have 20 apps on your phone to go call up a Cadillac, call up a Hyundai, call up a Honda. They're all going to be working on these own solutions, but they are not going to run their own apps. I think many of them think they are, but that's not going to happen. That's like whenever every company tried to do their own search engine and they're like, oh, you know what? Everyone just keeps going to Google. I think there's an opportunity for everyone to just continue to go to Uber because that's the one that's going to get you the fastest car to your door whenever you call it, because they have the most vehicles there. Now, the actual model of car that shows up to your front door, that's not going to be decided upon because it makes no difference. Anyway. Yeah, whatever's cheap and available. Now, in terms of the available part, Uber's going to win there. Cheap, they are going to take their take, and we'll have to see what that does to the margins of those products and who can compete. But I think Tesla is going to do very well, and I think Uber's going to do very well, and Waymo is going to do well because they're going to partner with Uber. Let's take a look at the current chances of a rate cut. I have not changed my stance as much as the market has changed around me. I said we're going to get 25 base points of cuts, and this does not guarantee, by the way, that we even get this. Okay, so I'll use this percentage to push my views, but this does not even mean that I'm right. But 80% chance of an ease currently for December 10th's meeting, but a 20% chance of a non-cut. If we end up looking back at last week, this was at 30% chance of a cut, 70% chance of a non-cut. It's completely flipped. 79.1% chance. That's incredible. How crazy is that? Lester says 73%. Well, it probably was 73% a minute ago, but it's 79.1% now. Which also can have the stocks pushing a little bit higher. People definitely want, to see stocks continue to climb. I see why a Portuguese woman chose you. You're a great man, Tanner. Luis, what does that mean? Which Portuguese woman? When is the decision? December 10th. December 10th, 2 o'clock. The actual JPOW talk, 2:30. Yeah. Yeah, he is the Portuguese woman. Thought your girlfriend was Portuguese. Okay, so she is Portuguese. I just don't know how you knew that. Did I say that one time? I didn't know I said that. I think Waymo Tech is far too integrated to be made adaptable to any car. I mean, they're working with other companies. We'll see how it works, but yeah, I did say it. Okay. Yeah. It is so weird because I could have said that 2 years ago, but if you just watched a 2-year-old video of me or something like this, then it's like, that's fresh to you, but that's not, I don't even remember saying that. That's funny. Okay. Crazy that the bottom was Fed Williams saying he thinks that we should have a cut. Yeah, and then I think it was Hammock as well came out and said that policy was not even restrictive, and oh my gosh, that was a terrible day, and it made no sense to me. It never changed my stance at all. It didn't make any sense. I've not been to Portugal, no. They've been trying to get me down there forever, and I don't I don't care to go. I hope her family's not watching. If you guys are watching, I like being at home and I don't want to go on a long flight. And that's that. Okay. Let's take a look at some more Fed commentary here.
You want us now
That
to
doesn't
discuss
count.
what's that? Yeah, to discuss the challenges ahead for the Fed. Former Boston Fed President Eric Rosengren, I think it's good to see you, Eric. And you listen to Mr. Williams, New York Fed President, also, and think, did you see the Fed futures? They almost doubled after his comments. So he holds some sway in your view?
Well, he holds some sway because normally the president of the New York Fed wouldn't take a position different than what the chair does. And so normally he does show his speeches to the chair, particularly if he's going to give an indication of policy. So it's not just that John Williams is a very good economist, but it's also, I think, that many people are assuming he's in part speaking for the chair. And so as a result, it's not at all surprising to me that the markets reacted quite significantly when he gave such a strong statement in support of a 25 basis point cut in December.
Yeah, that reading the tea leaves, that's good to know. That's useful information. You think it could be, as Steve said, 8.4 or 7.5? You really think it could be 8.4? You think Powell can get it all the way down to, I don't know, what could it be, 9.2 or something?
Yeah, I think I would be surprised if Steve Myron doesn't dissent for 50 instead of 25. I would expect probably 2 presidents to dissent for no cuts at all, and the rest of the committee to go along. But I think the minutes are going to show that there was much more support for doing, if you look at the participants and not the voters, I think the presidents are strongly in support of not doing anything at this point. So it's a situation where the voters really do matter. And it's a big decision once the chair's made clear which direction he's going, if you actually decide to go forward with a dissent.
Yeah. Yeah, those guys remind me of like sell-side analysts. Doesn't matter. They're sitting on the sidelines. They can say whatever they want. They don't have to put their money where their mouth is. Do you think the risks are more to the labor market right now, Eric? Or not? I'm not trying to put words in your mouth. You think it's still inflation is the biggest fear, or maybe a slowing labor market is more on the
Labor
Fed's
market.
mind?
Say labor market.
Well, the labor market's definitely weak, and there's no doubt about that. We don't have a lot of data, but the unemployment rate for September, which came out relatively recently, was at 4.4%. But the payroll employment number was reasonably strong at 119,000. So I think, yes, we have a weak labor market. The question is it going to get a lot weaker? And for that, I think you do have to think about 3% inflation. Affordability concerns have been highlighted publicly. And one of those affordability concerns is derived from having an inflation rate that's at 3%. When you look at the Fed funds rate being a little bit below 4% and a 3% inflation rate, that doesn't look like a very high real rate. So I think we've had 2 insurance premiums taken out the last 2 meetings where we didn't have very much data. I could easily see the case for pausing and waiting until we actually have data to see if the economy has continued to weaken through the fourth quarter. But you always get concerned when labor markets start to weaken, because if they start to weaken rapidly, it's very hard to offset. So I think the tail risk is more on the labor side, but I think it's a legitimate concern to say, well, we've had an elevated inflation for some time. It's at 3% now. And when you look at 3% inflation rate, the nominal interest rate actually isn't that high.
What is Myron's argument then? Because there are people that think, and it's interesting what you pointed out, that a dissent could be not just no cut, but it could be a 50 basis point cut. So it could still be, that could add into count as a dissent, but it's actually even more of a cut that he's looking for. But what is his argument? I think it's that we're in restrictive area, and there's ways you can look at the yield curve. You looked at it one way, but there are other ways you can look at it where it does look restrictive, doesn't it?
I mean, there are many ways to measure restrictive, but I think with very little data and having seen some weak labor numbers, one of the challenges is distinguishing between labor supply shocks, for example, from immigration, and labor demand shocks. So we would expect with lower immigration and some people being asked to leave the country, that's going to be a situation where the labor force is going to grow very slowly. So that means payroll employment growth won't be growing that rapidly either. So there'll be many people that would argue that unless that number gets negative, we shouldn't be particularly concerned, that we would expect something in the 25 to 50,000 payroll employment to keep the unemployment rate level. I think Myron probably thinks that the risk is much greater, that the economy could weaken even further than that, and that we've seen some fairly large layoffs at some large corporations, which is data that we do have. So I think his case is that he's more worried about that risk. I think until we have more data, it's actually very hard to sort that out.
I guess he thinks, but both tariffs and somewhat more less profligate fiscal spending. Is that true? Is it less crazy than it was on the fiscal side? A little bit, right? You're seeing some of it come in.
Yeah, I mean, obviously tariffs have raised money. But I mean, we're still running a very substantial deficit. So fiscal policy is still stimulative. Arguably, monetary policy is relatively neutral at this point, given where inflation is. We've had 2 insurance cuts. I think it'll be interesting to hear what the actual vote comes out. But I'm very confident the chair is going to be successful in getting a 25 basis point cut.
Yeah, I think that's a good way to summarize it. I hope that they get a 25 basis point cut. It would definitely calm market nerves. I don't know if there's any difference anyways, if it's, the difference of December or January, but earlier would definitely calm some nerves and keep stocks that are very interest rate sensitive, like SoFi, from crashing. Now, they are interest rate sensitive, SoFi is, so if you guys have been watching the last streams lately, you will know that we saw some people in chat commenting about, $18 in SoFi, going down to $20, all these things. The dip buyers, the money on the sidelines is absolutely here. Okay. So the second that we start to see sentiment bottom out, we have to be ready to realize that if there's one more comment, one Trump comment, one additional comment from one of the big tech guys, the entire market could turn around as they believe that there's another leg of growth, okay? That there's a new trade deal, that there is an interest rate cut coming to potentially save the labor market and stimulate growth again. Although they say that they're not watching the stock market, and I don't think that they are, they're not going to watch the world die around them and be too restrictive for just the sake of politics, or at least I would like to believe that, So I remain extremely optimistic. I always have. And my big indicator on whether things are going to be poor is honestly going to have to come down to earnings results and the actual fundamentals. If we start to see misses and less than 80% beats on the S&P 500, then we might have to signal for, okay, maybe things are slowing down. Maybe there is an AI bubble. Maybe the capacity has been reached. Maybe people are waiting for cheaper alternatives to NVIDIA to actually start, buying some of this GPU demand. But until then, I don't know. Let's take a look, see if there's some additional commentary on whether or not AI is in a bubble. Let's have a look.
Tom, let's talk markets as some stocks to watch with Stephanie Link, Chief Investment Strategist and Portfolio Manager, Hightower Advisors. Of course, she is a contributor at CNBC as well. And it's nice to see you with the Christmas tree up. This is, the Christmas tree up it makes sense now. It makes sense. A little earlier, maybe not, but now I'm with you. I'm with you. We're looking at a whole bunch of these stocks. Let's just start with Novo, though. What do you make of this news, this Novo
Yeah.
Nordisk news? Because this is, I think, a surprise. A lot of people have been pinning their hopes actually on this drug being able to help with Alzheimer's.
Yeah, I mean, I think obviously it's negative news and it's very disappointing, but I don't think there were a lot of numbers into the models because of Alzheimer's and the challenges that it presents. So I think obviously it's disappointing today and the reaction is understandable, but I think the bulls, Andrew, are going to focus on the Wegovy pill launch in the US, updated guidance coming, and lower pricing overall for GLP-1s, and that should boost volumes. But this is a battleground stock right now, and obviously Lilly stands to benefit.
We've been talking all morning about Google and its parent Alphabet. This comment from Mark Benioff overnight just about how he thinks Gemini 3 has now leapfrogged ChatGPT and the others. How much does this matter? How much does this change things?
I think at any given time, Andrew, you're going to have the winners, perceived winners, kind of take off, which is what Alphabet has done over the last couple of weeks in terms of its share price. But I think there are a lot of winners in not only in the technology world, but also in the industrial companies that are going to be building out all of this stuff in terms of data centers and the grid, and the utility companies also will benefit. And of course, the power companies, because we're underpowered. So I think that the whole food chain will win. Of course, you're going to have winners and you're going to have losers. But here's what I did over the weekend, because I just wanted to reinforce that AI is not a bubble. And the reason is because when you look at the companies that are building out the data centers, the industrial companies, right? So if you believe all the things that are happening at Google and Meta and Amazon, et cetera. So you look at the industrial companies and you look at the orders and the backlogs, they are substantial. And now I know you're going to push back and say orders can get canceled anytime. Backlog, not so much. So Quanta Services backlog was up 15% last quarter to an all-time high. Eaton, their backlog, their global backlog was up 20%, and their data center book-to-bill was 1.7 times. That's 2 years worth. GE Vernova, their backlog, electrification backlog, up 33%. And of course, the behemoth is Vertiv. And not only were orders up 60% and up 20% sequentially, but their backlog was up 30%. My point being is these are real revenue numbers, real revenue streams. And so, yeah, you can play it through Google. I'm playing it through Meta and Amazon. You can play it through Microsoft. But I think it's the infrastructure companies that are telling you that this is not a bubble.
I completely agree, and I've honestly wanted to highlight something that might be a shock for some viewers, but I do think I want to get involved on the AI trade. I don't know how. I don't know where. I'll be honest with you. I'm looking at Bloom Energy and have been listening to some of their calls lately. Might be the way that I end up going, but if that continues to be the bottleneck, that's going to be where all investment is going to go. Yeah, I don't know. We'll see. I'm not sure. I do have Nebius. Nebius Tanner's a real thing. Okay. I have a lot of Bloom. They're awesome. Yeah. Okay. I'm in Nebius now, guys. I'm in on the trade. Let's take a look really quick at their day, up 5.5%, $95 per share, putting them at a $22.5 billion quarter $22.5 billion market cap. Last quarter ended up growing at 60% revenue growth year over year. Do you think the dip is over now? It's way too early to call. I don't think anyone knows if the dip is over until December 10th. And then even then, I actually think maybe all the volatility might end up being before then, because the market is actually pretty good at stomaching bad news. It's the uncertainty that's the problem. So, but if we don't end up getting a rate cut, that's obviously going to suck. And it's going to suck specifically in the face of like SoFi and interest rate sensitive names, financials, those types of names, I think my data center names will be fine. Just because, the margins in all of the businesses are so high that I don't think these multi-billion-dollar data center buildouts are happening on a quarter point, decision. A quarter point decision that might be a month delayed. So we'll see. But yeah. Let's quickly take a look at cryptocurrency and BMNR in general. So Bitcoin not seeing as fast of a reversal here. 88,000. Ethereum 2945. Trying to push up 5%. Bitcoin up 1.8%. This is leading BMNR, which if you guys got into the dip, is now up 12.5%. So this was what we said the other day, on the way down, Ethereum can fall 2% and BMNR will be down 10%. On the way up, Ethereum can be up 2% and BMNR might be up, 8%. So very, very volatile, this name, which actually allows for you to, sell options on this name, both cash secured puts and covered calls at extremely high premiums, but just, don't expect them to always expire worthless. I mean, there's definitely a chance that they close in the money and actually exercise those shares. But yeah. I panic sold BMNR and Nebius. Am I cooked? Well, I don't know what that means. Are you meaning that, have you lost out on opportunity cost? I don't know when you sold. If you sold them literally like a day or two ago before we started to run back up, I mean, this is why you don't panic sell. I'm actually going to be making a couple of videos on this, just like the importance of just not letting those emotions get to you. You almost need to close the apps and get away from them because you can't panic sell. You can sell a name that you're down on if the thesis has changed. Okay? And if the thesis that could break for Ethereum is twofold. One, Ethereum is not actually used as the main blockchain. And then two, it being utilized on the blockchain does not correlate to the actual price of the token, which is, I don't think, going to be the case anyway, because the amount of, gas fees that are used on Ethereum end up burning more Ethereum and lowering the issuance rate. And net issuance can go into negatives on Ethereum. So less tokens and more need for those tokens the price ends up going up. So I don't think that thesis is broken. Nebius, it's like, okay, we're having extremely good growth. Every single large company is seeing growth. And then commentators and anchors of TV shows, including like people like me, are saying a certain, I'm not saying AI is slowing down, but people with similar jobs are saying, hey, you know what? AI is going to be in a bubble. Did you see how much their accounts receivables are, or how much their inventory is? It's like, guys, this is a business growing at 60+% rates. Of course, their accounts receivables are growing. Data-driven investing on our members call actually said something that was quite interesting, where he just said, if you actually look at the ratio between accounts receivable and revenue, it's been at the same ratio essentially their entire business. So as it scales, people are complaining. People are like, oh my God, it's up 60%. It's like, yeah, revenue's up 60%. That's kind of what happens. They're a bigger business today than they were last quarter and a year-over-year basis. So, yeah. Snapchat long-term, I'm not the right person to ask. Okay, I don't like Snapchat. I don't use the product. I don't like the management. I think that I do not like the management. Not a big fan. I'm Uber over Lyft. I like buying first place winners, not second place winners. If you guys see that across any of my investments, you'd know that I would take a share in Tesla before I take a share in Rivian or Lucid, you know. However, I've been reading a little bit about Rivian, so maybe that's not 100% true. I would take Tesla over Lucid, Uber over DoorDash, Duolingo. You know, it's a weird spot right now. Very, very weird. I think that there is some still existing business there, but I could be very wrong. What are your thoughts on Coinbase as a crypto move? It's interesting. I just don't even know if I'm just not a big fan of Coinbase. I just did a whole video, like a new video for the masterclass, like the course members, and it was talking about culture. And I went through all the companies that I love and companies that I didn't. And I'm trying to, you know, I've been trying to really think about this invisible metric that is culture. How do you actually measure something that doesn't have a numerical value that people do not put enough emphasis on, that is so important, right? Culture is what made, you know, Apple so special. It's what made Tesla so special. It's what made Coinbase so special, and Robinhood and Airbnb and PayPal early days. The PayPal mafia, that was culture. All of the people who learned obsessive work culture, obsessive value culture, those people went on to do amazing things because they learned those lessons from great people like David Sachs, Elon Musk, Max Levchin, you know, Peter Thiel. All of these people all came from PayPal early days. So that's been something that I've been highlighting a lot lately is culture. And Brian Armstrong for Coinbase is extreme, like 10 out of 10 a CEO for culture. I love Brian Armstrong in the way that he runs that business. Politics aside, feelings aside, we are a mission-driven company, and everyone that comes to work should believe that crypto is going to be the next big thing. Okay? Big believer in that. However, I think the benefits of crypto is that it's easy to get into and it's easy to build on, and that's only going to get easier over time, and there's going to be a lot of competitors in that space. And whenever I look at customer growth and market share taking and all of these things, I just look to Robinhood and just go, oh, Robinhood's just going to do Coinbase's business better than them. That's my concern. Okay. The last two Bloom Energy earnings calls are the best I've heard outside of NVIDIA. The CEO has been grinding to this place for 25 years. Yeah, I did listen to their recent earnings calls. They seemed good. I don't know if I'd place them as the best earnings calls of the year, though. But yeah. It really is true. And you guys may know Paul Graham, the founder of Y Combinator, and he wrote this very famous blog called Founder Mode, and everyone made fun of it because it sort of got adopted by this 5 a.m. wake up hustle culture. And they sort of took that and ran with it. And a bunch of people who are half-ass shitty CEOs essentially said, oh, we're going into founder mode. And it, you know, separated itself from the real people who are, you know, 10x CEOs that are actually doing something. That being said, I still think that the concept is real, that there is CEOs that are founder mode, and then there are CEOs that might be more managerial mode. And the original person, by the way, that Paul Graham wrote that founder mode blog on, talking about those concepts, was actually Brian Chesky. And there's this amazing video online of Brian Chesky talking about culture. probably find it online. It's about 5 minutes long. And it really does go to show you the types, like, you need to look for those types of assets whenever you're investing, because it will separate the good investments from the 10 out of 10 investments. I mean, the ones that truly multiply over decades. And you see those attributes in Jared Isaacman, in Elon Musk, in Brian Armstrong, in Vlad Tenev. There's so many names, in Toby Lutke, and maybe Peter Beck. I don't follow that, but if people are truly saying that that's someone that I really need to look into, then that's probably a great investment that I need to read into. In Karp, 100%. In Zuck, 100%. In the video that I put on the course, I Karp was a big part of it as well. Like, one of the key things that I would look for, in an investment that probably works, and what you never find in companies that 10x or multiply even larger than that, is some CEO that doesn't stand out. It honestly rarely happens. You almost need this evangelical, crazed, like, CEO, and Karp embodies that completely. Vlad embodies that. Elon embodies that. Jeff Bezos, Mark Zuckerberg, all of those people are crazy different. I just bought VG. Yeah, I don't know why it's crashing down so much, so I need to do an Alex Chris. Honestly, we don't know. And I wouldn't even dare put him up there. I'm sorry to Alex Chris, but like, he's been an operator for 1 year and nothing's changed in that 1 year. So like, I'm not even saying that he's not, but we have zero idea. I would not put him in that league at all. Not yet. Robinhood or Webull. If I had to pick I said that I like the number 1 names, not the number 2 names. Which one do you think I'm picking here? I pick Robinhood over Webull every time, and I don't have a single share in Webull. Zuck for sure not. He's a snake. Okay, well, he created a company in his dorm room that's now coming up to a multi-trillion-dollar business. So this idea that he's for sure not, it's like, think about what you're doing right now in your parents' basement, commentating on a guy who's changed the world for everyone. Most of the technology that the world runs on, like the code, the open source code that is written, was designed and put out by Mark Zuckerberg. Like, let's just think about it for a second. So, he stole a company. He didn't steal a company. He stole an idea. Ideas are cheap, bro. There's a lot of, I've given you guys tons of ideas. Go steal them. You make them into trillion-dollar businesses. It takes, like, I never agree with those types of things where someone's like, or even Trump, right? This is not even a political thing, but people go, oh, he was gifted $1 million. Like, dude, it's hard taking money and multiplying it. Like, whether you like him or not in politics, his ability to make money has been, like, that's a proven fact. People go, oh my God, he's created a steak company. I'm like, I don't give a shit. Why do you count people's losers? Count people's winners. How many winners do you guys have? I don't have many, So, like, it's hard. So whenever people win and they win often, you have to point that out as a success. And that's not a political thing. I'm not making a statement like this. I'm just stating, like, I think Zuck is a weird lizard, weird water drinking weirdo. Is he one of the greatest operators in business of all time? It's undoubtable. It's undoubtable. Okay. Yeah, brilliant people are often strange and unlikable. I bet that's true. No, you guys remember the clip of him water drinking? I drink a lot of water, but like that clip of him drinking water was insanity. Okay. Buying Instagram and WhatsApp were strokes of genius. Dude, you know how many people called him an absolute insane person for buying WhatsApp? He bought it for like $18 billion, like one of the most expensive acquisitions at the time. You know? So, look, I was just going to highlight that I do think that it's important to find these CEOs that take massive risks, huge calls, are involved in every aspect of the business, down to like, and you definitely see a lot of that with, well, you know, the Mark Zuckerbergs and everything, but Vlad Tenev being one that's a close example for me, because like you just look at how obsessed he is with this business, and he'll go to traders' houses to see, okay, how are you using our app? Like show me where you're sitting, show me how you're using it. You know, show us your trading stations. What other companies do you use? So let's see. Like he didn't like the way the earnings calls were going and thought that those were boring. That is extremely unique. That people always talk about first principles, but they don't think about first principles. Like what does first principles mean? Vlad Tenev is rethinking about how boring his company earnings calls are. He's redoing that idea. He's, you know, what's it called? What was I going to say? You know, going on YouTube to see, okay, how are people discussing about our company? How are people using our business? What are the stocks that they're trading? How, like, he's just redoing it. And I think that's a really good trait. And there's many companies that do it, but it's hard to find them. CNBC's talking about Hood right now. Let's take a look. Oh, they are. Let's see. Oh.
ETF leverage. They make a lot of money on securities-based one silo, a little bit of a falling knife, but for they are the leader in AI allies. They're also winning commercial.
Victoria, let's go back. I want to hear this.
You say that Palantir is
commentary
winning
as well.
the AI software race. Are you a buyer here?
Absolutely, I am. We are transforming the way businesses operate, the business, the government. There's so much modernization that needs to happen, and it's happening now quickly, and it's Palantir that is leading the way. And if you look at their revenue growth, it's about 53% year over year, and they're winning not only government contracts in the US, but in the UK, other allies. They're also winning commercial contracts. They have their AIP training class that's been extremely successful in helping people implement AI. How do they transform data into something useful? How do they modernize their businesses? Yes, their knock was, oh, the valuation has run too far too fast. Come down about 20%. To me, I would leg into this stock. It is catching a little bit of a falling knife, but for they are the leader in AI software, and they're going to modernize the U.S. government. That takes a little bit. Poor Doge couldn't quite do it, but maybe Palantir can.
All right, buyer of Oracle, buyer of Palantir. Let's go down the market cap scale a little bit here and turn to Robinhood. Also up more than 5% today, but shares are lower by nearly 23% this month to date period. Under pressure from the breakdown in cryptocurrencies, Bitcoin in particular, but you call Robinhood more than just a crypto play.
Oh, it absolutely is. It's an everything platform. If you look at their trading volume and their transactional revenue, it's options, it's equities. Crypto is a part of it, but crypto is one silo in the story for this stock. And now they're getting into prediction markets, which is the next leg of potential sports gambling. They're coming out to modernize the infrastructure or the user interface on their app, so it feels a little bit more like a sports book. Suddenly, you now have a new vertical for people that can actually kind of want to gamble on these prediction market contracts. And so for me, I look at this and say they're absolutely winning here. Bitcoin holding 80, obviously that was crucial. We'd love to see the crypto market run. 80 was a huge support that held. That's great for crypto related stocks. But this stock isn't just crypto trading volume and needs a bull market in crypto. This is also what's happening and how the next generation trades. So options, equities, ETF, leverage, they make a lot of money on securities-based lending and margin. And so I like this stock because for me, I see a lot of upside on a modernized trading platform that appeals to the next generation.
All right, and how about now how you're going to get your eats if you're tied to your trading desk over there at home? DoorDash shares down 26% so far this month, but still a Wall Street darling. Wolf Research calling it a top pick until year end, while Jefferies has now upgraded that stock back to a buy rating just last week. Dash is reporting strong third quarter results, but fourth quarter guidance came in a bit lighter than expectations. And Victoria, this is the name that you're perhaps not as excited about.
It isn't. And full disclosure, I use DoorDash way more than I would like to admit publicly on TV. But for me, the stock is what's the moat? As technology gets better, as AI gets better, and their platform is maybe going to be under attack from AI agents. Because if people all of a sudden use AI to order food, then they don't have an individual and a human to sell to because they want to have that relationship direct with the customer. So if you have the issue of the AI interface getting between, say, a platform like DoorDash and the consumer, that really is going to limit upsell, sell this, do this add-on. Do you want to add this cookie in for $2, which we all, of course, say yes, because we're susceptible to being upsold. And so I'm just concerned on the growth of their verticals and how sustainable this platform growth is in an era of transformative technology. And so that's the question the market also has, that yes, this is done well, but concerns going forward, can you continue to have this growth? You definitely still have competition from, say, Uber Eats and other platforms. And then you potentially have new competitors entering the marketplace as other platforms get better and stronger, or restaurants may be able to cut out the quote unquote middleman and build out their own infrastructure more cheaply using AI agents. And so for me, I just can't do a buy here, even though it's been under so much pressure. It's a hold for me.
All right, 3 buys and a hold. Victoria Green of G Squared Private Wealth, thank you very much. We'll see you soon.
Thanks, Don.
Okay. Cool. No, I actually, I'm a big believer in those same names that she sort of stated. Palantir is amazing. Would be nice if we can get a little discount on it. Robinhood's looking very strong, and DoorDash looks extremely expensive. So, yeah, I think that's fine. Dude, if Vlad showed up at my house, yeah. Okay, let's see. A lot of VG talk in the chat. Where's VG at today? Still falling? Yeah, but I have zero idea why this is falling. I heard it's something around litigation and stuff, which also scares me, but VG now down at $6.92. This has been quite the bloodbath. Very popular retail name, but has gone from $25 down to in the sixes. Sheesh. I don't know anything about them other than that they're a big LNG name. They took on a lot of debt to grow very fast, and they do have very fast growth rates, but I don't know much about them. AI Buffett will give us more Buffett. Yeah, that'll be weird, eh? It'll be the one nice thing, I guess, hopefully, about publicizing myself and putting myself out in the public is that hopefully, if one day I pass away, that there will be enough content through different stages of my life that you could almost recreate the person that I was. I think that might be nice in a weird dystopian future. My mom has passed away. I told you guys about that. But I have photos of my mom. I've got maybe 2 videos of my mom, but she never really liked being behind a camera. So it is sort of weird to think, in the future, would I be able to, have some sort of conversation or meet an AI how dystopian is that? How weird is that? So a little bit weird, but I know that my kids hopefully will have not only a view of who I was whenever I was younger, but maybe who their dad was as they got older and after I'm way long and gone. So I do love that about YouTube, is creating a little bit of a legacy and a database for myself. However, it's probably going to lead to some scary hacking, deep fake moments where the content and voice and everything that I'm doing here is used to try to, penetrate my bank accounts or do something that uses my voice. Like, have you guys done that, by the way? Your bank will be like, hey, can we use your voice to authenticate who you are? Like, no, what? Like, what are you talking about? In an AI world, you're going to use my voice. They're going to replicate my voice. Huh? I always get a custom PIN set up for your cell phone providers, for your bank accounts, all of those things. Yeah. I know it's a little strange, but I definitely would. I'm on that train, the singularity train, a little bit. Who knows? Yeah, I don't know when that was a good idea. Doesn't make any sense to me. Okay. Google Authenticator is why can't I think of that? F2P. What is it? But the authenticators are good. My understanding is that they're. Yes, yeah, sorry. MFA. Or two-factor authentication is what I was thinking. Two-factor authentication. Yeah, 2FA. Okay. What do you like more, Google or Amazon today? I would be actively buying Amazon here today at these prices. I have more Google than I have Amazon. But yeah. Okay, let's see. Google number 1, Amazon number 2, Apple number 3. Is this your portfolio? I've got no belief in Apple these days. Not that they aren't going to continue to sell iPhones and everything, but yeah, I do think they will. I don't think the moat's as strong as people say, and I don't think they're growing, and I don't think that there's a little bit of an inkling of culture there anymore. I don't think anyone cares. I think they're all coming for a paycheck. Excuse me. Hey, it's my opinion. You guys can have your own. I hope you make a lot of money and prove me wrong on your Apple shares, but I think probably in the near future, and it could take many years, but that Apple will probably fall out of being a top 5 name in the stock market. $200 phone socks don't help. No, I know it's usually the sign of like, you guys want to see one way to judge if a company is running out of innovation is multicolors. It's really as simple as that. You look to like Keurig whenever they were becoming super popular and that company was exploding, and then they were like, yeah, the Keurig in blue, and then I was like, oh gosh, that's it. That's how far their potted coffee is going to go, and it never advanced since. Ninja took it a little bit further, and I bet on that company for those means. But once all the Apple things started coming out, they started putting their iPhones out in orange and in these super glossy, really nice looking colors. I was like, that's it. They can't think of another form factor. It's done. Not that, like, some people can think of it like Porsche, right? Like Porsche's maybe found the perfect form factor of a car. And so there doesn't need to be very big changes each year. It doesn't need to continuously change. It just needs small, tiny, incremental changes until it's perfect. And you don't want to continue to innovate on perfect. That makes sense to me. But am I an Android holder? Yeah, I do. I've got an Android. I have an Android because I like products that come out faster than iPhones. Everyone thinks, all the iPhone users think that they are getting products. Like, it's so funny watching you guys get products and you're like, this is so amazing. It's like Android's had that for 2 years. And it's always been that case. Because there's 100 teams developing for Android and there's one company developing for Apple. But it's cooler to have an Apple, and you pay a premium for that. So enjoy it. And this idea, Amit, by the way, Amit, are you watching? Expose yourself right now. That sounded like one of those like dominatrix, like piss yourself. No, type in chat. Tell me if you're here or not. But if you are here, he always makes fun of me because I said that if Apple falls behind, that people will switch away from iPhone and go to Android. 100% that will happen. I'm not saying it will. Like, I'm not saying Apple is going to lose to Android. I'm stating if they don't innovate, people will switch. The same way that, like, if ChatGPT cannot keep up with Gemini, Mark Benioff will switch and he'll never go back. You know? Now imagine you put that amazing Gemini service on a Pixel and you offer some amazing new products that you couldn't even, iPhone holders could never even think of. No one understands, like most problems that are solved are not asked for solutions. The entrepreneurs of today are solving problems people didn't even know they had. Okay. And so an iPhone user, and I'm not stating like, oh, iPhone users are dumb, they don't understand. I'm saying all consumers do not understand, including myself, what they're willing to change for in the future. I don't know what I want out of a Pixel in the future, but AI is a big step change and that will create new products and services. That's guaranteed. So if Apple doesn't get their game together, I worry that they will fall behind in creating new services and being able to compete against, Android and the other services. Maybe Apple just teams up with ChatGPT and they go head on and do everything together. But I don't know. We'll see. There's credible evidence that Apple is getting a foldable iPhone and glasses next year. If those fail, they are in trouble. But I'm cautiously optimistic about it. I do think Apple on the hardware side is muy bueno. They're awesome. If they end up getting AR glasses, I cannot wait to see what happens there. And just because they folded on some previous products doesn't mean that I don't think that they can't, do well into the future. I think the VR goggles were really, really cool. It was a big step up. They had a great way of looking at it by putting the battery in your pocket. I thought that was great. But, that culture needs to be there to continuously push that forward. But it's hard waking up hungry in silk sheets. You ever heard that? Like, Apple might feel like they've already won. Google is chasing after their tail. Those engineers are hungry to try to prove that they can win. Let's hope that Apple is not started celebrating before passing the finish line. I do think glasses are for most people, but yeah. Sergey saved Google. Yeah, I mean, but that literally, like, one man's brain share did not save that company. I think it's honestly the culture of Google that's starting to come back. Okay, let's take a look at the stock market. BMNR up 14% to 29.68. Robinhood up 6%. Let's actually take a look at the broader markets here. Because, woo-wee, the NASDAQ, oh my God, when did this day happen? Geez, were we watching this whole time? The NASDAQ's up 2.6%. That is a great day, ladies and gentlemen. That's a lot of fun. That's a ton of fun. Let's go back. NVIDIA up 1.7%. Amazon up 2%. Meta up 3.2%. Chime up 3.7%. AMD up 5.7%. SoFi up 7.2%. Tesla up 7%. Grab up 7%. Nebius up 10%. Broadcom up 10%. IREN up 13.5%. And the Danai's AI ETF now was up 3.5% before, now up 4%. BMNR is continuing to climb here. Is Santa here? I mean, all hope was lost last week. The thumbnails were red, okay? I don't like doing it to you guys. I'm not here to clickbait. I want to make green logos. I want to be happy with you guys. Which, by the way, does not drive as many views. People love to be miserable online. It's insane. Like, let's make money together. I'm sick of these scam Lee comments. Let's get some more 14.5% updates. Yeah, you're so right. These sentiment shifts could give you whiplash. Says Parvizol. Is it Parsival? Is that what you're trying to say? No, Parvizol. I know Parfazol, or now I'm going to mess up how to say it, but from Ready Player One. Parsival. That's what it is. Parsival. Oh, yeah, you are stating that. Is that the Ready Player One thing? Okay. Yeah, Canadian glitch. It's true. Yep. Okay. Hey, it's a good book. The book's not anything like the movie, but good book. Lets you see into what the metaverse might look like. Okay. Introducing, oh my gosh, we're pushing for 15% on BMNR here. Let's go. 14.9% on BMNR. Great movie. I just rewatched it. Cool. Yeah, the book is completely different. Like, the first key is not even it's like on school training grounds in this cave that's, you know, from some Atari game, and then in the movie it's like a race with like a dinosaur. So I don't know. It's completely different. 15%, 29.92. Are we heading back to 30 for BMNR? This would be so fun. A lot of people saying the bottom is in. One comment. But I mean, it is true. Like all I was trying to do for the last week was keep people calm. And I'm like, the only way that this turns really bad is if it lasts a long time. If it lasts a long time, retail fatigue is just going to set in, and then people are just going to say that the stock market is rigged. That's whenever you need to start selling your hood, because people are just going to leave their trades. Okay. Who would have known the bottom was in on the day that, Burry ends up opening up this new $380 newsletter. Everyone goes, oh, okay, yeah, no, we can buy. You know what? Everyone says famous last words. The famous last words is people who quote famous last words. I see this all the time, just randomly. Famous last words across people's rise, like Mark Zuckerberg rising, and then people go, last words, last words, last words, last words, and then he just continues to propel. So no, the famous last words are that exact thing, famous last words. Sometimes the bottom is in, okay? Sell the rumor, buy the news. Okay, well that one stays a constant. Tanner, your 2-sentence pitch for BM&R. Ethereum is the blockchain for all financial institutions. And and BM&R wants to hold a lot of it. 2 sentences does not give me a lot of room to work with. Hey, we hit 30 on BM&R, 30 freaking dollars. And then at that time, lunchtime show is great. And Ezzy ends up becoming a YouTube member to celebrate the $30 mark. Congratulations, everyone. We are only now down 80% on our average holdings. There we go. Let's get back to it. It's going to be a real while. But, at least we're not going to zero, Joking about the being down 80, but I'm kind of not as well. Some people did buy in the high 50s. Okay. I got $42 cash secure puts on BM&R for December 19th. Might actually go back out of the money. I mean, I hope for you. Yeah, I'm less poor than I expect. That's what stock markets are these days. During these volatile days, we just need to lose less money than where we were down before. It's not really a referral game. Not many people are saying, hey, man, you got to get in this market. I'm losing a fortune. But it's actually, if you were to be smart enough to refer your friends to start investing these days, that's when they would do best, is whenever everything is red and you go, hey, man, I'm down a ton. You need to get in. Not a great selling feature, but, might actually be sound advice. Okay. Ethereum, by the way, is up 5.5%, leading BM&R to triple that rate, up 15%. I actually didn't even see the BM&R update today. I didn't even read about it. They must have put out a new press release on their new Ethereum updates. BM&R has reached, I haven't even seen this. I'm slacking. BM&R has reached 3.6 million tokens and total crypto and cash holdings of $11.2 billion. Unencumbered cash of $800 million. They're stacking cash. That is incredible. BitMine will hold its annual shareholder meeting at the Wynn Las Vegas on January 15th, 2026. Tom, am I invited? Tom, can I come? If I get invited, that would be nice. Let's see. I'm a shareholder. I mean, it's an annual shareholder meeting. 3.629 million Ethereum. What did they buy in at? Acquired 69,822 ETH tokens, one of their smaller buys. And Maven is going to start up in Q1 of 2026. Yep. Hey. While we're down, everyone just enjoy the dividend. Enjoy the ride. Yeah. So you'll go to Las Vegas, but not Portugal. I mean, yes. I don't even like Las Vegas. It feels like what's the pursuit of all pleasure? What's that called? Hedonism. It feels like a hedonistic city. I don't really partake in gambling or illicit drugs or prostitution or any of these things. And I just feel like Las Vegas loves those things. And I specifically mean the Strip, by the way. There's a lot of people who live in Las Vegas that just like live outside the Strip. By the way, it's just a tourist zone. From what I've heard from all the locals there, they never even go to the Strip. But that Strip, whew, it's not my favorite place. Okay. Amazon or Meta. Ooh, that's a good one. Bought 200 shares at 220 last week. Totally regret that. Thoughts? Oh, today regretting that. Thoughts? Sorry. No, I wouldn't be worried about buying Amazon at 220. I think you'll be fine. But they both look good. I'm definitely buying more Meta here than Amazon because I'm taking advantage of the recent dip. But they're both great. The Vegas was way better when it was run by the mafia. Good old days, eh? I miss when the mafia used to take care of me. They knew how to treat a customer right. Okay. On the first day in Vegas, a little kid gave me a card for escorts while I was... No, literally. I mean, they like drive these cars that are essentially just big billboards down the middle of the Strip just saying like escorts for you. I'm like, it's not really my place. I'm more of a sit at my computer and look at stocks. ETH is really pumping. Yeah, 6.2% right now. It's going to lead BM&R even higher. Bloom Energy up 7% to 96 now. Bitcoin also climbing up 88,800. The NASDAQ, it might actually breach the highs for the day here. We're coming up on it, 2.68%. Let's see if there's any news that's pushing this other than the Trump tweets of going to China in April. Fear and greed index is at a 14 right now, which is it's largely improved from where we were last week. I mean, I think we got down as low as like 5 or something crazy. Yeah. Oh, did we get Fintel? Here, wait, let's see. Did we get Fintel institutional update? Institutional updates? Let's see. Institutional ownership. No, it's the same as before. I just saw a post on online that maybe suggested, but I don't even know what that would be for. It'd be for December, and we're not even in December yet. But institutional ownership for SoFi continues to climb higher. If you guys haven't seen this list already, I still think it's quite good. Okay. J.R. Perry with the membership. I appreciate that, brother. Yeah, you'll be sitting fine on those Amazon shares, I think. I'm not an oracle or anything. I can't predict things. I forgot my crystal ball at my old house, but you know, it is a good company, and Amazon has faced very, very little competition their entire life. So yeah, looks good to me. Putting Weeble against Hood or Overhood is are you talking as a platform or as a stock? Because that's a little Magusto. Thank you, my friend. Really do appreciate becoming a member of the Future Investing. Are we a team? What are we? I don't even know. Okay, let's see what else is going on here. Anthony Pompliano was on this morning talking about Bitcoin pullback. Let's take a look at what he had to say this morning. Let's get into it.
Bitcoin down more than 22% in a month. Joining us right now is Anthony Pompliano. He's the founder and CEO of Professional Capital Management. Pomp, We need to understand sort of where you stand on all of this. Also, I should say there's been a bigger even fall in some of the other cryptocurrencies, but you've been a Bitcoin man. So where do you see the floor at this point, and where do you see the upside?
Yeah, well, let's put this all in context real quick. So over the last decade, Bitcoin has drawn down 30% or more 21 different times. Of that, 7 of them have been 50% or more. That's like having a global financial crisis every year and a half for a decade. So Bitcoiners are used to this. Now, who's not used to this are the people who are coming from Wall Street. They're not used to this type of volatility. You know, global financial crisis, there is literally people still fearful of that happening again. And so I think that what we're watching is as the rotation of the holder base happens, these new people are very, very fearful. We're going into end of year. There's things around bonuses. People are trying to figure out, should I actually sell this asset that I thought I was really excited about? And I think that's putting some downward pressure on the price. Now, in terms of that drawdown, given that there's been 21, 30+% drawdowns, I do think that a 35% drawdown that we've seen from the all-time high is pretty healthy reset. And I think that there's a question in the industry. Is this going to be one of these very large drawdowns that we've seen in terms of these bear markets of 70, 80%? Or is this simply something that is more normal? And we should expect this reset to then provide a new base, and then we go back to all-time highs over the next couple of weeks or months.
And where do you stand on that question that you just posed yourself?
I heard something pretty interesting. Matt Siegel over at Van Eck said, well, Bitcoin's, in terms of Bitcoin's volatility, has been cut in half over the last year or two. And so if that's the case, if we're used to 80% drawdowns, maybe now the drawdowns are about 40%, right? You would expect that if the volatility has been cut in half. Well, we just saw a 36, 37% drawdown. And so I do think that as volatility compresses, people will be disappointed to the upside because it's not going to have these blow off tops that they expected. But also there may be some, safety in terms of these 80% drawdowns are gone as well. And so I tend to think that we probably are somewhere around the bottoming. Again, if you see the fear and greed index at, I think it was 8 for Bitcoin, 6 in equities, that tells me that you can't stay there that long. And so I think that we might just go sideways for a while here and then start to kind of grind back up over the next couple of weeks.
Anthony, one of the big questions has always been how much leverage there is in the Bitcoin universe and whether there gets to be a point, and I don't know what the inflection point is, where there are enough margin calls that it effectively becomes this sort of self-fulfilling prophecy on the downside. Where do you stand on that? I mean, obviously, we talked to Michael Saylor just about a week and a half ago. He obviously represents a huge part of the market, too. Also, there's a number of ETFs now that represent a big part of the market. So how do you see that piece of it?
Yeah, well, there's a lot more leverage in the system on October 8th and 9th, right before the big liquidation. And so I think that, again, part of that healthy reset is that we went from higher degrees of open interest and leverage to today something that is much more normal. And I think that, again, that fear and greed index is a great signal as to how bullish people are. And, there's always the quote of you want to buy when there's blood in the streets. I don't think I've ever seen the equity fear and greed index at 6. The Bitcoin one going to 8 is very, very rare. And so I think that you're not going to see high degrees of leverage whenever you get that fear. And so that gives me, great confidence that we're probably not that far from having bottomed.
So are you buying right now? And what do you see as the upside in terms of how you look out even 12 months out? Because we've heard lots of predictions that would mean that the value would effectively have to double, triple, or more actually to reach some of the expectations we heard probably 12 months ago.
Yeah, I've been coming on the show for a long time, and every year I try to end up with more Bitcoin than I started the year with. This year I will have accomplished that, and also I will end Q4 with more Bitcoin than I started Q4 with. And so I think that if you've been doing this for a while, you understand that this is part of the volatility. The volatility is actually a strong signal. It's not a negative. I actually would be worried if Bitcoin's volatility essentially was 0. You need volatility for the asset to go up. Bitcoin is up 240x over the last decade. It's about a 70% compound annual growth rate. We are not going to continue to have that level of growth moving forward. But if we get something that is 20, 25, 30, 35% compound annual growth rate for the next decade, you're going to outperform equities. And I think that's why a lot of Bitcoiners are very excited about this asset as part of their portfolio.
Do you feel the same way about Ethereum or Solana? I should say, by the way, down even more than Bitcoin.
Yeah, you know what's been pretty interesting is I think that going into this bull market, people thought, okay, Bitcoin will be the lead in terms of movement on a sequence basis, but the alts historically have outperformed in these kind of euphoric blow-off tops. We haven't really seen that as much as I think people expected. And so instead what we've seen is that Bitcoin has remained kind of the dominant asset. A big part of that is that Wall Street embraced it first. Now, over the last couple of weeks and months, we have seen Wall Street start to take a look at ETH and Solana and some of these others. But I do think that there is still a kind of category creation, a category winner in Bitcoin as a store of value. That is probably the largest total addressable market. And so I think that Bitcoin will stand alone and it will continue to be the king of the crypto market. Doesn't mean the other things are going to go to zero. Doesn't mean that investors aren't going to go put that in their portfolio. I just think that Bitcoin is able to kind of obtain a very special place in a portfolio. And that's why you see so much capital flowing in. And that's why you see Bitcoin dominance continuing to be so high compared to the other cryptos.
I also wanted to show you guys this. I have not seen this. This is brand new, but it's about on the strength of the consumer, regardless of the K-shaped economy that we're end up seeing. There was someone in chat as well that highlighted this new model. This was just uploaded by Claude roughly, I don't know, 20 or so minutes ago. Introducing Claude Opus 4.5, the best model in the world for coding agents and computer use. Sorry. And they're actually ranking above Gemini 3 Pro across agentic coding, agentic terminal coding, agentic tool use, scaled tool use, computer use, and novel program solving. Pretty interesting. Claude has always been the coding agent for the longest time, but yeah, these are some pretty phenomenal. Once again, this frog leap that we literally talked about at the beginning of the stream happened again, where you know, a product that might have been quote unquote falling behind is just because they haven't released their newest model, and then they do, and they end up coming to the top, and then ChatGPT will end up coming to the top, and then you know, Grok 4.2 or whatever the one that they're working on, 4.5, will end up coming out and then jumping to the top. It happens. Regardless, if the industry continues to move forward, it opens up more tools, more use cases, more need for more token generation, which means the AI play continues. Just whether or not me as a consumer, I want to use Claude. I don't know of many people that use Claude on a personal basis. There definitely is, but it's not as large as the, you know, ChatGPT, Gemini, or Grok usage. That's for sure. Let's go ahead and take a look at if the consumer is holding up in this K-shaped economy right now.
Joining me now is former chair and CEO of Saks, Steve Sadov. He's also the former chair of the National Retail Federation. Steve, it's impressive right now just how much the U.S. consumer is staying resilient, but can it keep up? And just where are you seeing the biggest signs of stress?
Well, Dom, I think your observation is right. The consumer has held up extremely well. If you had asked me 3-6 months ago whether or not the consumer would be holding up with a plus 4% type of consumption trend, I would have said I would have been surprised, because you saw so many elements that looked like they were going to weaken. But month by month, the consumer has held up. They're continuing to shop. Now, you do have a K economy. And a K economy is essentially the high-end consumers doing very well. The stock market they're tied to. I used to say at Saks we had about a 0.9 R-square between the stock market and luxury sales. And the lower-end consumer is very stretched. And you can see that with a focus on value being what is winning. So you have this bifurcation among the winners and the losers. But overall, the consumers weathered the tariffs. They continue to shop. The outlook for the holiday season is for about 4% growth versus year ago. You saw that similar number in the month of October. We're already seeing the heavy discounts that are coming in for Black Friday. So I expect this to be a pretty healthy season.
All right, healthy season is one thing, but are there certain companies out there? Steve, you're an operator at your heart. You've had decades of experience doing it. Which types of companies are executing well and properly in that kind of environment, and which ones, in your mind, maybe are not?
Well, I think the operative words are value and innovation. And those companies that are delivering against value, and what I mean by that are the Walmarts, the TJXs, the off-prices, the Ross stores, extremely good execution and tight price points. You look at a Target's had a harder time. I think they're trying to do a lot of the right things, but I don't believe they're delivering the value that you're getting at a Walmart, as an example. I think the off-price players are taking share from the department stores. The department stores are executing, but the high-low department store model is much more stressed relative to the off-price retailers. So now they're within each of them, there are companies doing better and worse relative to execution. But I do think that off-price, the value that's being provided is winning in the marketplace.
Steve, we've made a lot of this K-shape that you referred to, this idea that higher-end consumers and lower-end consumers, mid-scale consumers are kind of diverging. One place where we are seeing a little bit of a convergence, a narrowing of that K, so to speak, is in places like a Costco or a Walmart, where some of the higher income shoppers are now starting to traffic at some of those locations more than other ones they have in the past. Is that a trend that you see continuing in that regard? This idea that both high-end and middle and lower-end consumers all kind of go to certain specific locations, like perhaps a Walmart or a Costco?
Well, I think that Costco, Walmart are winning on multiple dimensions. Costco is a great place for a find. It's a membership model. Walmart Plus is a membership model. Both of them are offering great value. I think that trend for both of those companies are continuing, and they're doing both of them are doing a much better job in what I would call innovation in fashion. So Walmart, for example, called out in their earnings call the growth that they're seeing in the fashion apparel space. That was never a place that they were winning. They were always 60% grocery and driven by commodity apparel. Now they're going after innovation in fashion and taking share from Target, which used to have the Target innovation model. And I think that you're seeing Costco also deliver against that find that the high-end consumer wants. So you are seeing a big growth in the $100,000 plus customer at both Walmart and at Costco. And I think and you're seeing a trading down from the lower end consumer. They're also buying at the Walmarts, but they're also buying at the dollar stores and going to the off-price players.
Yeah, I mean, that was pretty boring. I was expecting a little bit more insight than that. It's good to know that people are still spending, but that was boring as all ever. I didn't learn a thing. Okay. Let's go back to the LLM stuff. Let's go back to the AI trade. Every LLM has different usages. It's like saying that cooking with one pan versus another does a good job. Yeah, I guess that makes sense. I like the pan analogy. I just, maybe Gemini or ChatGPT end up working the best for myself. Honestly, Grok does good research, but I just hate how outside of research, it's not even like they're like a 5 out of 10 on other tests. They're like a 2 out of 10. Like they're actually terrible. That kind of sucks. Okay. Did you see the clowns on halftime show say that Alibaba has the best LM? I mean, they definitely, Alibaba and some of these Chinese names are definitely in the running. I think some people count them out. I think some people count out Chinese silicon as well. And I'm not ready to count them out at all. I think that Jensen is very worried about China developing their own silicon, their own models. I think it's a real threat. They can't buy Blackwell. I know they can't buy Blackwell. The problem is what happens if they have their own, what if Huawei ends up coming out of nowhere and ends up really competing and trying to sell their chips to the rest of the world? Yeah, I am not underestimating China as an opponent, especially one that's been able to manufacture high tech solutions. They won in solar. They're doing extremely well in EV. batteries, all of these things that people said that America had won, and then they let their foot off the gas, and then they lost. Yeah, they have energy and labor advantages that cannot be discounted. 100%. Okay. Okay, let's see. Let's go ahead and take a look at markets really quick as the NASDAQ has pulled down a bit over the last 10 minutes while we were watching that. Still up 2.6%. And let's take a look. What are the things that are moving? Oops. What are the things that are moving today? VIX is down 12%. Wow. Oscar Health up 19.4%. CleanSpark up 16.7%. Cipher Mining up 16.5%. BMNR up 16. Some of the 2x leverage funds are doing well, but IREN up 13.8%. Open Door up 13%. We're back on to just, it's all hot, extremely high beta names. Back on to risk on. These were some of the worst companies that you could have your money in during the last week of some of these sell-offs. But Applied Digital up nearly 11%. Broadcom up 10.6%. Wow, the meme, I mean, there's no volume on it, but the meme fund is up 10.2%. Nebius up 10.2% as well. That's just incredible. What's doing poorly today? The VIX. That's a good sign. Novo Nordisk down 6%. 8Co down. 8Co is going to zero, and I hope it does. It doesn't deserve to exist. It's pointless. Tom Lee should get burnt 100% on thinking that he can just put $20 million into nothing and expecting everything that he touches to work. I think like absolute garbage product. Venture Global's down, Dutch Bros, Target, DraftKings, Fubo. What do we think about DraftKings? What do we think? Is DraftKings going to stick around or? Yeah, it's not. Honestly, Dan Ives has nothing to do about. Like Dan Ives should never have touched it. I think that he was just seeing how well it was doing with Tom Lee, and he was like, "I need to also get involved." What does Dan Ives have to do with, Sam Altman's, what do you call it? WorldCoin. I don't get it. You know? Eightco is iris scanner technology tied to blockchain. No, WorldCoin is iris scanner technology tied to blockchain. Eightco just buys WorldCoin. It's a digital asset treasury that acquires that coin. It doesn't need to exist. What is this? What is this crap stock? You don't even need to know about it. It's called Orbs. Trade desk is 38.88. Whew. I got a little burnt on that name, but man, I dodged a bullet. See, this is proof that I do sell names that I don't have faith in anymore. They dropped the first quarter. I was like, man, we can, like Jeff Green's not going anywhere. This is a great company. And then by the second quarter of, well, it wasn't second quarter in a row. They missed a quarter, which can happen to any company. Like Palantir, if they miss a quarter, doesn't mean that they're a dead company. It might actually be an amazing dip buying opportunity. Then they came back. Then they dipped again. That was your time to sell out. Because once you start missing in a row, maybe it wasn't just a short-term issue that ended up biting them in the butt. Maybe there's something going on in advertising that makes their product not worth the premium that it was given before. And that's exactly what we're seeing. $38.80. That's incredible. Look at the year that they've had. This is year to date down 70%, guys. Down 70. You'll need to make like almost 4x your money just to get your just to get back to even since January. That is one ugly chart, says John. You're right. Holy. Is a long-term lurker allowed to joke that I'm looking at Webull right now and not Robinhood? Of course, of course. Because the valuation of Webull looks compressed and Robinhood's looks expensive. I understand looking at it 100%. It's just which one's going to work in the next 10 years, something like this. It depends on your trading style. If you think, hey, you know what, over the next 6 months, 1 year, something like that, what's going to work better, Webull or Robinhood? Like absolutely Webull could, could find a big investment that could climb up over time. But I think it's more a matter of, the good thing about buying quality is time is on your side. You don't have to try to time things that constantly. If Robinhood is growing faster and winning more market share than their competitors, then it might take them a bit for the market to recognize them. It might take NVIDIA a little bit for the market to recognize them, but it doesn't matter because they're growing at 60+%. So like, even if you call it a value company next year, they'll still benefit. Like there'll have to be buyers, or they'll buy themselves with buybacks. Tanner, any opinion on Nubank and why it's stuck here? Not really. I love Nubank. I think that they're doing amazingly. It was actually one of the companies that I highlighted in the recent new chapter of the course was Nubank's David Velez, and his thoughts on culture is super important. And what's actually funny, I was looking back on some videos on David Velez. Whenever he originally pitched the idea of Nubank back in 2013, he created 2 pitch decks, one on the company to VCs, and then he created a culture presentation to his co-founders. And he said, this is how we're going to build culture. That's how important those invisible metrics are, that culture that I was talking about. So huge believer in Nubank. What happens in the short term, I don't care as much about. They continue to grow members, take market share, improve gross margins, lower cost to serve. Every aspect of what you want from a company and from a fintech, they are doing. I don't see a problem at all. Okay. I don't follow Open Door. No clue. Nubank is a scam in Brazil, man. Okay. I'll believe you in the 127 million people with the lowest complaint rate in all of Latin America, because you probably work for Itaú or something like this, one of the big banks in Latin America, and you think that they're a scam. They're the only institution in Brazil in the past 500 years in the financial system that isn't trying to scam and steal from their users. They're the first real financial institution in Latin America. You're calling them a scam? You work for the enemy. Latin America's banking before Nubank was a mafia, legit financial industry mafia. Nubank is coming in and actually offering real services and giving back to the users, and people are loving them. Go on the App Store ranking, go on any single thing. You tell me where you find the negative reviews calling Nubank a scam. You're the first. Who triggered him this time? It's too easy, but anyway. Do you know about Plata? I know about them because I did a little bit of research into them just because Galileo services their debit card. Okay. Damn, Tanner's mad. You must be new around here, eh? I'm a passionate individual. Nubank's one of my larger holdings, so honestly, I really do think that Latin America is one of like a really cool place to invest right now. I think of it as a little bit of a boom town. Yeah, I think there's a lot of opportunity there, especially in fintech, e-commerce, internet plays in general. Okay. Tanner's falling for the rage bait more and more often lately. No, bro, I think he was being legit. I don't know. Maybe I'm wrong, but it just sounded like somebody who's used Nubank and didn't like their experience. I could be wrong. Maybe I got. It's been known to happen. Yeah. We're seeing a trend here. Let's go ahead and take a look at some other names that are not down a ton. Bitmine holding above 30. Yeah. Looking at this as a 1-year chart is crazy. This does not look like if I saw a chart like this is the companies that you want to stay away from. And here I am, a shareholder. You know what chart this actually looks like? This kind of looks like Upstart. If we go out like 5 years on Upstart, huge thing, couple of bumps, still falling. Same share price, not the same market cap. $3.7 billion market cap on Upstart. This is how you know. By the way, this is how you know that no one on Wall Street cares about this name. That they I did not realize they were less than $4 billion business. If their AI models were going to revolutionize lending, JP Morgan would have just sent them a $6 or $8 billion check and just said, hey, hand it over. Hand it over. Yeah, I'm not a bag holder. I'm a BMNR community member. Talk about XRP. I don't have any opinions on XRP. But yeah, I'm really surprised at the market cap of Upstart. That is crazy to me. Dave has a better AI lending and underwriting system. I need to do more research on Dave. I don't know enough about them. Tanner, I'm using Nubank in Brazil, and my experience is bad, like SoFi and Hood. See, I can spot rage. That's rage bait. My experience is bad, like SoFi, Hood, and NVIDIA. Okay. Are we going back to all-time highs on Upstart? Maybe. I'm not gonna cancel it out. I'm sure you're talking about just the markets in general, but I wouldn't even cancel out the idea that Upstart could go back to all-time highs. There's a possibility that they do very well, but I'm just not willing to take the risk on that. Nebius, $91, up 9.6%. Beautiful looking day today. Happy you guys can all be here with me. Tanner, I'm using Ethereum and the experience is terrible. Honestly, you guys are really freaking funny. It's very funny. Okay. Google new all-time highs? Yeah, they've been doing that lately, eh? They just keep doing it. Look at that. That's almost like Claude Opus didn't just get released today. What was the news? What was the news? Geez, I couldn't find the O on my keyboard there. You guys ever type P a bunch and then just backspacing and you're like, where the heck is this? Maybe that's a me problem. Okay. Google is now worth more than Amazon and Tesla combined. Whoa. Here we were thinking this company was dead a second ago. I'm beneficial with the save. Google Cloud's Anthropic's new Claude Opus 4.5 is now generally available on Vertex AI. I think Microsoft also came out with a similar thing. It's not necessarily a bullish thing, but yeah. Really appreciate the afternoon streams. Mostly Power, thank you for being here. It's going to be a quieter week this week. We get some macro news tomorrow, next, like Tuesday and Wednesday. That'll be interesting. Yeah, 10 blue links. They said, dude, literally, I mean, like that was like Brad Gerstner that said that. You saw the Couture management guys say that Google wasn't even in their top 40 AI names, not top 40. Okay. And then, which they've changed now, but I've got the receipts, ladies and gentlemen. We take screenshots here. So, well, no, I just, Wayback Machine, it's still there. But now their new fantastic 40 AI names does include Google. I actually think Google's their second biggest name behind OpenAI. So, yeah. Okay. Google is the MVP this year. Oh, yeah, it's everyone's MVP. This has been a great name. This has been a great name. By the way, where are you guys listening? Are you guys mostly traders and investors, or are you guys at work? Like this is sort of lunchtime, or am I plugged into headphones or something? Me being plugged into headphones, and people are like, how am I supposed to comment to you? No, it's okay. Your silence speaks volumes. Thank you. Did they forget NVIDIA this time? They did. NVIDIA is being forgotten. But, yeah. Investor in the headphones at work, in the earbuds. In the ear. So many people are saying in the earbuds. I'll try to scream less and headphones. I'll try to explain what's on the screen then much more. I didn't realize like 90% of you guys are saying that you guys are, UPS driver. So hopefully that's audio only. You're not just watching the charts. I trade and drive. Trading and driving is the next. That's you're probably best off drinking than trading and driving. That's dangerous business. Lot of headphone users. Okay, I'm going to explain audibly more what we're doing here. Okay. Full-time trader and investor. Oh, that's awesome. Okay. Also, can someone ban that AI token thing? I hope no one ever falls for that, by the way. Any of these people telling you that the next greatest thing is in the comments section of future investing, it's probably not true. Okay. Surround sound at a bar. I genuinely hope that's not true. That would be the whole bar. Yeah, the BMNR's up. Yeah, shots are on me. Okay. Let's take a look. Little report on the Opus launch from Anthropic. Let's hear what the Power Lunch has to say. Okay, let's take a look. Oh, whoops, I have to do it like this.
Amazon as well. These are the kind of headlines that can and often do move stocks. So let's hit them both. Mackenzie Sigalos is out in San Francisco, starting with some breaking news on Anthropic.
Hey, Brian. So Anthropic is launching its most powerful model yet. It's called Opus 4.5, and it is the new flagship of the Claude family, built for advanced coding, agentic workflows, and enterprise tasks like financial modeling. The update includes new Excel and Chrome tools and a feature called Infinite Chat that prevents memory cutoffs in long conversations. And it comes as Anthropic commits more than $80 billion to compute over the next decade, including a new spend commitment with Microsoft Azure and its own custom-made data centers across the United States. But in terms of this model race, some would argue that Anthropic's chief rival is now Google. Gemini 3, it hit the top of the benchmarks last week. Salesforce's Mark Benioff said he would never go back to ChatGPT after using Gemini 3. So we're really seeing this rivalry heat up, Brian.
Yeah, it really is. It's pretty amazing to watch all the investment that's going on into this as well. Let's pivot now. Anthropic is obviously private. Amazon is not. I mean, the numbers just keep coming out. Amazon talking about $50 billion investing in AI, but I never know, Mackenzie, and maybe you do. Are these new numbers, or do we hear the same headlines about the same numbers kind of over and over again?
So in the case of this Amazon announcement this morning, it's additive to existing commitments. So we knew that they had that $11 billion data center created exclusively for Anthropic in northern Indiana, and then another $38 billion with OpenAI. But now today what they are talking about is planning to invest up to $50 billion to build out AI and supercomputing capacity exclusively for its U.S. government cloud customers. Now, that project is meant to break ground in 2026. It's going to add nearly 1.3 gigawatts of capacity through its new AWS data centers built for classified workflows. And as you know, that's roughly enough to power 1 million homes here. And one other thing I'll say about this, as part of the expansion, federal agencies are going to get access to Amazon's full suite of AI tools, including Anthropic's Claude models.
So joining me now is Victoria.
What the heck just happened? Why did that just do that? That wasn't the end of that. Hold on one second. Wait. Oh, it was the end. Oh, okay. That seemed just like mid-sentence, did it not? All right. Cool. There was another video that I just wanted to watch here as well. I guess I'm kind of using you guys as a little bit of my own DD, and we can kind of watch these together. But Vlad Tenev just ended up posting a new tweet. It was just a video talking about a financial super app. So let's have a look. It sounds like it's going to be quite loud, so I apologize. Actually, I'll adjust it, and then we can, yeah.
We don't really think of ourselves as a trading app anymore. The way to describe what we are and what we're increasingly becoming is a financial super app. Like, we want to be your primary and your secondary financial account. So we have Robinhood Banking, which is rolling out right now. I think it's the best banking product on the market. And if we serve customers well there, their direct deposit comes into Robinhood. And then once we've got the direct deposit, it's sort of like our assets to lose. And we look at all the ways in which customers take money off the platform. We ask ourselves, is that something that should be happening on platform? And I think that's what's pushed us into this multi-product line conglomerate. It's like a financial conglomerate. You know, across some of our businesses, we do have a fiduciary responsibility where, you know, the leaders of those businesses, for example, Robinhood Strategies, they spend day and night thinking about how they can make as much money for you as possible. Other businesses are more about selection. Like, for example, prediction markets. What do customers want to trade? How can we make sure we have the highest market share relative to our peers?
Ooh, I'd love to watch this whole interview. It's not live. It was just posted on Vlad's X, though. But yeah, I do think that that's one of the best features about Robinhood is across the many segments of their business, Robinhood Strategies, banking, you know, options, all of these things that are, you know, co-teams. Somehow the design and the feel and the top-notch service comes across on every team. It really is fantastic. They have the best engineers in the business. Whether or not they are going to be able to compete and be the best, bank in terms of banking services, we'll have to see. Not many people have access to it fully just yet. So it'll be rolled out slowly, but I do think that's going to add a lot to their business. I'm Beneficial says, Apple cuts jobs across sales arm, notifies dozens of employees in recent weeks. Dozens? Dozens. I mean, that sounds worse than it is. Tanner, are you still doing the tech frenzy? We are at least going to take probably a month off or something like this, at least, to focus on the midday streams. Get a feel for that. I'm also going to be spending a lot more time trying to put out, full videos, and we'll see how that goes. I'm also putting out a lot more content to, course members and stuff. So between that, we'll see if I have time to do another live stream. But I'm loving these midday streams, keeping the eye on the ball for, markets. But I want to try to get out more fully recorded videos, and just finding the time is going to be hard across everything. Okay. Midday is awesome. Loving having it up while I work. Yeah, everyone's been saying the midday streams are super fun. So, and I'm having a lot of fun doing them. I love the long length. I know the rewatchability is not great. Like the second the stream ends is kind of when the views end, but it sort of builds the community up, and we hear a lot of different themes, and people post on when Trump is live, or if, Tom Lee is live, or if there's news about Apple or different layoffs, or if Anthropic just posted something. So it all kind of helps whenever you guys are active in the chat as well. So I really do appreciate it. That's normal for every live stream. Well, no, my 7 o'clock live streams would get views till the morning. So a lot of people would catch it whenever they wake up or whatever. These kind of end immediately when the live stream ends. Wait, I got a $5 donation I didn't read out. JTB John says, gotta say, I really appreciate your time slot. It makes it easier to stay on top of things. Thank you so much. No, it's helping me. Okay. That being said, the regular stream time is going to be between noon and 3-ish. If the news continues to keep up, tomorrow and the next Tuesday and Wednesday should be jam-packed with news. However, Thursday is no market that day. Maybe I end up going live to talk about other things, because I do want to keep the consistency. It helps me. So maybe we plan a couple deep dives or something, if you guys like that consistency, or if you want to, if you guys don't think you'll be there and spending more time with family, whatever, I understand, then won't do it. And then, what else? Okay, wait, this might end up demonetizing me, but let's just have a look. Oh, and then Friday's a half day. Actually, I'm not going to listen to this with music, but this is Amazon Leo, which is their old version of Amazon. What was it? What was the name? It's Amazon Low Earth Orbit, by the way. That's how they get to the name Leo. But this used to be, it's a funny name. What was it? Can you guys help me? The Project Kuiper. Okay, let's have a watch. Okay, no, that's going to get me demonetized. Introducing the Amazon Leo Ultra. Up to 1 gigabyte download speeds. Woo! Woo! Amazon is such a cool freaking name, man. This is so amazing. Like, whenever I said that they are going to be in every futuristic technological advancement, I never even included space. But yet Amazon Leo is here. Prime members are going to get cheaper, more widely available access to to internet in very rural areas. I just think like they're so cool, man. Thank you, Tanner. I can't read. Did you not see whenever everyone said that they were watching via or listening via their headphones? We just watched a video of the essentially competitor to Starlink, but Amazon's version. Okay. You can't hunt a wild turkey in Canada and have Thanksgiving with us, Tanner. Yeah, I don't even know if that's true or not. but we definitely do have Thanksgiving. It's just at a different time. Canadian Thanksgiving has already happened. I think it's in October sometime. But yeah. Ladies and gentlemen, we are going to wrap there. I really do appreciate your time. Thank you all so much for watching. If you guys are new here, hit the subscribe button down below. Make sure you guys can catch all the daily live streams and videos that are uploaded. But until next time, bye for now.